this, I don't remember what trading instrument this was, and it's actually irrelevant, because no matter what you trade, whether it's a stock, a future, or a Forex market, this is going to happen sometimes. This is when you have to put the mouse, you have to take your hand off the mouse and not trade. Remember that order flow is going to, and order flow and momentum are going to give you a directional bias, but you can't trade when you're sandwiched in between support and resistance. So you just don't trade. If you take a trade, and remember, your mandate here is to avoid risk at all costs. Day trading for profit, swing trading for profit, is never about the number of winners you get. It's always about the number of losers. If you take 2 winners every day, you're going to make great profit. If you take 3 winners and a loser, your profit will be okay, but not as good as 2 and 0. So you really have to trade with a lot of specificity and do everything you can to avoid risk. And when you have the area of support and resistance sandwiching price, you just have to wait. Eventually, price will break out. You can't predict when it will break, but after it breaks, that's when you've got your license to trade, not before. Stand down when an area like this presents itself and don't trade. And there is no indicator ever invented or ever will be invented based upon my analysis of the forces that are present in the markets that are going to be able to predict when there's going to be a break of support or resistance. So here's what we went over. We went over market profile, and that's created by volume profile. And market profile consists of the value area high, the value area low, and the point of control and low volume nodes. And all of that together, they create these zones of rejection. Then there's the delta moving average of your trading chart, which almost has no predictive value. It simply takes into account the delta of every individual candle on your trading chart, which could be red on an up candle or green on a down candle. What you need to look at is a smooth 15-period moving average of the 2 higher time frames. That provides you with a great order flow direction. Then when you combine that with momentum, that's also calculated from the 2 higher time frames, you've got a tremendous advantage in predicting where price is going to move on your trading chart. And we also project the volume ladder because in it, at certain times, it does create valid areas of intra-candles, minor support and resistance that you may want to take into consideration when taking a trade. Again, the limitations of the volume ladder is that a recurrent sell imbalance at an area of upside resistance does not predict a failure and a market reversal. What predicts that is order flow. A recurrent buy imbalance down into a pivot or up into resistance is not going to predict the break of resistance. Intra-candle and buy-sell imbalances that create the volume ladder don't predict trade continuation, and they don't tell you, they are not going to tell you when the market is exhausted. What you're looking for is when the market reverses and selling pressure on your 2 higher time frames is going to give you a great counter trend trade. That's when you trade in the opposite direction. You don't take much information off the volume ladder. That is a proffered trade configuration that I often see, and I'm telling you, it leads to failure after failure. Because sometimes the information in that volume ladder is not what's projected on your order flow direction. And that's the direction that leads the market and provides you with your trading direction. So that's really the indicator. I'm just going to go over our offer and our special, and then I'll take any questions if there are. Now, our indicator, it does come complete with the modified Fibonacci momentum. It's really a trading system. And if you're one of the first 5 orders, you're going to get 3 months in the live trading room. You're going to trade with me. And so not only are you going to get the indicator or the trading system, but you're going to come into the live trading room. And you're also going to get, it's a 10-module weekly educational training session. Now, we've already done the first 5. You'll get the first 5 on a link. They were supposed to be an hour apiece, but they run usually about 2 hours. Some of them are 2.5 hours. But I'm going to teach you how to trade from the ground up. And you're really, really going to understand what it takes to become a professional, profitable trader. And one of the components of this educational training session that I've almost never seen taught is how to create an automated trade management strategy. Everybody's always talking about how if you risk $1, you want to make $3. Well, that's really nice in theory, but if you're trading an instrument that has very low volatility, you are never going to get $3 out of every dollar you risk. You're going to have to settle for a lower amount of money. So creating your stops and your targets is based on the ATR, or average true range, of your trading instrument. Now I'm going to show you mathematically how to take a trading instrument, calculate the average true range, put that into a formula, and optimize it so that you have the optimal stop, which is really the minimum risk you can take on the trade without getting stuttered out of it, just on market static, and the maximum amount of money you can make setting 3 targets and scaling out of the trade. If you try to squeeze more out of the trade, you're likely going to fail because you won't get to your targets. And your goal is to get to your 3 targets. We had a 3-target trade today on the NASDAQ. We got 7 points. Actually, I think we got 9 points. We got 9 times. We had 36 ticks because we know what the volatility is on the NASDAQ. We can't get 36 ticks on the E-mini. So that's an important component of the trading, and it's the one part of the training I have never seen discussed. Everybody just tells you what you should want, but it's really what the market's going to give you based on a mathematical derivation. So these are included. And the webinar special is $879, and the first 5 get 3 months in the trading room, and you get the 10-module, the 10-weekly educational session. The 6th module is right after the 4th of July. It's the Wednesday after the 4th. And we're going to be going into actually indicator analysis because we've done a lot of work on price action and market structure. So let me see if there are any questions. I only have 5 more minutes, and I don't want to run over time. Let me see if there are any questions. Okay. Let me see here. Hey. Jeff, let me tell you why fib levels don't work. I have to, let me just go to, all right, let me just go here. I wish I could do this. Here, I'm going to show you what I'm going to do. I'm going to bring this over here. And I'm going to draw on this chart. I'm going to draw on this slide. Fib levels give you, you take a swing high and you take a swing low. I can't really do it, but let me just describe it. You take a swing high and a swing low. And based on that swing high, swing low, then your Fibonacci extensions are supposed to give you areas of support and resistance out into the future and tell you where price is likely to hold or break going out into the future based upon where price has been in the past. Now, I can tell you from doing a long analysis of the market there's only one ultimate parameter that determines where price is going to move out into the future, and that's money. It has nothing to do where price has been in the past. There's a couple other things I want to, so in making the assumption that a swing high, swing low in the past based on Fibonacci extensions are going to tell you where price is going to move out into the future is erroneous. In addition, Fibonacci was an 18th century mathematician, and Fibonacci transformations are really, really nice mathematical derivations, and they do create physical symmetry in nature. They have the number of edges on a snowflake and the number of ridges on a pine cone. So there are direct correlations to Fibonacci numbers, but he never even looked at price in the markets. And if you look at Elliott wave and Gann theory, where they project future price based on past price, they just don't work. Price is governed by money flow at the time of the trading entry. And if you take Fibonacci support and resistance and you do 2 years of market replay data, you'll see that they just don't accurately portray where price is going to hold up or price is going to break and move through. They don't accurately portray support and resistance levels. Lots of people trade them, and I believe that they're one of the reasons that a lot of people lose money, because I don't believe that they work. Order flow and momentum is a trail of money. When there's an overabundance of buyers, people are looking to put money into stocks, into futures, into Forex. When momentum is moving to the upside, it means that they're putting money in at an accelerated rate. That's a second-order derivation. It doesn't tell you that price is moving up in a linear direction. It tells you it's moving up in a geometric direction. So order flow is aimed to the upside, and momentum tells you that price is accelerating to the upside. That's the component that we're missing. And when you've got those two aligned, these aren't direct measures of money flow. They are indirect, but what they're really tracking is money into the market. And in no way does Fibonacci trace the flow of money. I hope that answers it. Okay? Let me just scroll down again. I want to try to get them all answered. Ranjit, what we do is we accumulate data in our volume profile going back a proprietary period of days. If your market profile indicator only accrues data from your trading chart when you open it in the morning, it's going to create a VAH, VAL, and POC, but they're going to be very poor. They're going to have no predictive value because they're going to be based on very little volume at price. When you open ours in the morning, it will have already stored volume. I can't tell you exactly the look-back period, but it's over 2 days. So you get 2 days of volume accumulated, so it's immediately going to project a VAH, a VAL, a POC, and the zones of resistance, everything you need, and an order flow direction, because you've got volume stored. That's what gives it its power right at the open of the morning. I'm sorry, George. Any chance that you can increase the size of the arrow? Sure. You can make it as big or as small as you like, George. And Canoe, it's okay. I see your question was answered. The Forex platform does. This indicator works great on Forex. I don't have time to, if I had time, I would bring up our Forex platform. It's the same signals that you get on any market, you get off the Forex markets. We do trade it, Don. We trade it every single day. You know what? It's a good question, and you know what? It's just an additional revenue stream. I trade it every single morning, and we have 125 people in our trading room. So, you know what? We do trade. Ninja and Sierra. Yes, Ramagru just said all Fibonacci trading rooms lose money, and I'm telling you, Fibonacci will not get you where you want to go. Right now, NT, but we'll be on Sierra very, very shortly. MT4 is in the future, Samuel. Right now, we're Ninja Trader and Sierra. We're going to be on TradeStation shortly, and then eventually we'll be on MT4. Well, Sierra, we're going to be we're basically done with Sierra. Sierra is a great charting platform, and I really like it. Well, listen, I'm 3 minutes over, so let me cede my time. Yes, we do, Michael. We do. We take the trading in the room very, very seriously. And this morning we made $565. We took 4 trades. We had 3 winners and a loser. But we swamped that loser with 1 winner, and then the other 2 winners just went on to give us over almost $600 in profit. I'm sorry, absolutely, Ranjit. It's in our website. I just don't have time to show you. It's there under performance. We make on average $4,000 a month. Our profit target on just a very small number of contracts is $1,000 a week. We hit that profit target most weeks. I'd say about 85 to 90% of the weeks we hit it. Over the course of 3.5 years, we've almost had essentially no losing months. And what we display on the website is exceedingly accurate. We have too many people in the room. So listen, thanks everybody. I really appreciate it.
Thanks a lot, Mark.
Rory, would you put the link to the special offer in the room?
Yes, it's in the room.
Okay. All right, listen, thank you guys. I'm going to sign off. The next speaker's ready to go. Have a great, great afternoon. Thank you so much. Bye-bye.
Thank you, Mark. That was great information on Market Profile 2.0, leveraging volume into your trading. Next, I have Mr. Leigh Goldstein of JOBracketBreakout. And just a real short bio on Leigh. Lee's been trading the news reports successfully for over 15 years. He's got quite a bit of experience. You can find him every day, week in and week out. He trades the most influential news reports. He uses an optimized bracket trader. Leigh has just recently optimized his software and has a brand new strategy that can grow your account literally in seconds. Very exciting trading. Here's my friend, a great down-to-earth guy, Leigh Goldstein of JOBracketBreakout.
Thank you very much, Rory. Can you hear me okay? I just want to make sure you can hear me, see my screen, and I'll get going.
Yes, you look great. You hear
great.
You sound good. Thanks,
Rory. So I want to thank everybody for giving me your time. Some of you, I recognize you, and I've seen your name, Rumaguru. You've been to quite a few of my webinars. Arthur, it's nice to see you, and Ranjit, nice to see you as well. So it's always fun to see members, friends of JOBB in the rooms. Keep coming back for more information, and hopefully you'll keep making money with the system. I never know what I'm going to do, in all honesty, when I come to these webinars. Sometimes I just figure I'll do a standard presentation using Microsoft's whatchamacallit, the PowerPoint. Other times I just feel like showing trades and talking about our new software. I think today I'll do a little bit of everything. We have a brand new version of our software, and I have a really interesting, different way of trading the news that has been, right now it's been mixed, but it's got a tremendous potential to be tremendously successful. Very low risk, good way to make a very nice profit with just one contract. and I'll explain it and show you how I do it. But first off, I just want to let people know and talk about the risk that, you know, anytime you're trading, there have to be risk disclosures available. You know, you can lose money when you trade. You could lose more money than you have in your account, and you want to trade smart, trade the proper size for your account, and don't take undue risks. Don't trade your food money, don't trade your mortgage money, and be smart about it. If you're smart about it, you can definitely make money trading, develop a system. And I'll tell you this, in all honesty, there's a couple of things that I have found over time that unequivocally will absolutely hurt you as a trader if you do these things. The number one mistake that traders make is they underfund their accounts. So if you put too little money in your account, you're going to lose money because you're going to be trading scared. You're going to be worried that if you have one or two bad trades, you're going to be out of money. And you'll never be able to relax and trade in the proper way. So number one, don't please underfund your account. Put enough money in, no matter what you're trading, whether you're trading a system, Mark's system, or my system, or anybody's system. If you don't have enough money in your account, you're going to hurt yourself, and you're not going to be able to do it. And that even goes for discretionary trading. If you're trading oil and you have $800 in your account, and your trade's down $200, there's no way you're going to be relaxed and be able to make an intelligent decision in that trade. So absolutely fund yourself properly. Secondly, a big mistake that people make is they have so many things running in the background, or their machine is underpowered, or they've got scanning going on while a system is running. So absolutely be careful about what you've got going on in your computer at the time that you're trading. Don't have any Microsoft updates getting ready to fire off. You know exactly what's going on in your computer at all times so that you're prepared and you're smart about what you're going to be doing, okay? Very, very important. And before you leave here, I just want to make sure that I give you some information for free about trading the news. If you've seen me speak before, heard me speak before, you know that for most of our lives as traders, we've been warned against trading the news. Most traders say they don't trade the news. They don't want to be in the market when the news comes out. You're going to lose money if you trade the news. And we're the exact opposite. We want to be in the market the second the news comes out. We want to trade that news report the moment it gets released, because we have a software program that helps us to stay as safe as humanly possible when we trade the news. And that's the concept that we're proceeding on. We want to be in that market when the news is released. So what is news trading anyway? I mean, news trading very simply is, for instance, yesterday the oil storage report was released. When that report is released at 10:30 on almost every Wednesday, it's a reliable report. It's released at a reliable time. When that report is released, if the storage numbers are very high, very often that'll cause the oil index, futures is what we trade, futures on Ninja 7, very shortly on Ninja 8. But when the oil report is released and the storage is very high, the odds are good that the oil index, the futures index, is going to go down. Because if there's too much oil, the price of oil naturally would go down a little bit. So we're trading the moves that are made when news reports are released. How do we know what news reports are being released? That's the most important part of our job. It's to find these various websites that are out there. Most of them are free. For instance, forexfactory.com has a listing every day of all the major news, what they consider the major news that's being released today. For instance, they released final GDP this morning. Unemployment claims came out this morning. This evening, there's going to be manufacturing PMI from China. And then tomorrow, we've got some impactful news as well. In the morning tomorrow, we've got Canadian GDP. And we also have British news at 4:30. If you want to get up and trade that, we have a way to do that. And then at 10 o'clock, there's revised University of Michigan consumer sentiment. So there's always news to trade. And also, very importantly, tomorrow at noon, big news report, you got to know where to find it, is the quarterly grain stock report. And that doesn't show up on your normal news websites. So that's one of the things that our members are hip to. We make sure they know extra news that's coming out, because our experience, we know where to look for the extra news reports. And just so you know, I'm not trying to hide anything from you, but if you go to the USDA, the Department of Agriculture, you're going to be able to find grain stock reports, and it's really going to be a great extra set of news reports that you can trade. So forexfactory.com, one website. We also use investing.com, really great website. What's nice about investing.com, they have a fantastic calendar, but what they do that's fantastic is while the trade, the news is being released, just at the moment the news is released or a few moments after, they update their website in real time. You don't have to press anything, you don't have to do anything. They give you the news result on their website automatically, so it shows up. So while you're in the trade, you could analyze what the news is, and you could hopefully make your trade more profitable by making a good decision based on what the news result was. So that's investing.com, a very, very good site for trading news. We also use Fast Economic News, fasteconomicnews.com. Let me find it if I have it up here. It's the only one I didn't put up here, so let me get it up here. Bear with me one second. Fasteconomicnews.com happens to be a Forex site, but we trade futures, so you might ask yourself, well, what are you guys doing on a Forex site? Well, the truth is, they have such fantastic information, and it doesn't necessarily matter that they're a Forex site. They still give you great info that you can apply to the futures market. I also highly recommend fasteconomicnews.com. You sign up for their free news signals. They give you fantastic emails before the news comes out, talking about the report, talking about what might happen, what might trigger a trade, real smart stuff. But even the best part, the thing I like the most about their website is the key to trading news is knowing how the reports behave and knowing how they behaved last month and the month before, which gives you an idea of how they're going to behave tomorrow. So on Fast Economic News, if you have a report that you like to trade, say for instance, let's say the oil report, you just click on, let's say pending home sales, it's a little bit simpler. You click on the pending home sales link, and then Fast Economic News has a database of tons and tons of pending home sales reports, charts, dates, times that the report was released, a fantastic tool for back testing older reports. It's a website I personally cannot live without if I'm trading the news, and I highly recommend it to anyone that wants to trade the news. We use Econoday. They have an excellent international calendar, all sorts of news on there. FX Street, there's quite a few different websites. Those are my favorites. forexfactory.com, investing.com, fasteconomicnews.com. Those are my personal favorites. Okay, those are, it's free information. Take it, study it. You should always know when a news report's being released, even if you don't trade the news, because let's say you're an oil trader, and let's say you happen to be in the market on a Wednesday at 10:29 a.m. Eastern Time, and you don't know that that oil storage report comes out. Do you know that that report sometimes moves oil 30, 40, 50 ticks? It could blast you out of your trade, cost you a gigantic loss if you don't know what's going on. So you need to educate yourself to the news, whether you're going to trade it or not. You want to just be aware when it's coming out. so that you don't get stuck in a trade on the wrong side of the trade by accident and do harm to your trading account. And you can really harm your trading account if that happens. So I just want you to be careful, be aware that the news can affect the price very, very dramatically. Can I put again the website, please? Which website, Juan? I'm sorry. Which one? All of them. I'll tell you what they all are. ForexFactory.com, very easy. FastEconomicNews.com, okay? FastEconomicNews.com, and Investing.com. Investing.com. If anybody has any questions, if I go too fast, or if you want to contact me directly, I'll give you my personal email. And I'm not joking, it really is my personal email. I'm going to send it to you right now. It's procall33@gmail.com. Send me an email, I will answer it. I'm real good about it. I answer my emails quick. It's another great feature of our service. We don't leave you all alone by yourself. We want you to be a member of our family. We really feel that we are a family. Our members are our friends, and they're people we care about, and we want you to succeed. And we're not going to get an email, ignore it because it's a Sunday. We're going to answer it, and we're going to do our best to help you no matter what you do, okay? And that's a promise. I make that promise as I'm here right now. We have a brand new, what I'm excited about is there's so many things going on with our company these days, I don't even know where to start. We've got brand new software versions coming out literally in a couple of days. Major features that we've added to our software. Not only is it a news trading program now, it's become just a fantastic futures trading program. And I'm very excited about the upgrades we've done to our software. I'll show you what we've done to it. We're beginning to redo our website completely. We have a new website called freetraderoom.com. On freetraderoom.com, that's where we put all our trade room invitations. Right now, currently, everything we do, except for our membership, is free. But our trade room is free. You can come in, watch what we do, but that's going to change. We've been doing it for a year for free, and you know it's expensive to do all this stuff. I noticed that the question was, and it's a question people ask all the time, if your stuff is so great, why do you not trade it? Why are you selling it? And you know, think about it. First of all, this is the United States of America. I mean, we sell stuff, we do things, we trade, we sell, we make money. We do all sorts of things. I'm sure that that gentleman has a job. I'm sure that that gentleman might even sell something. I'm not embarrassed to sell something, but I'm also an educator. I'm also trying to help people learn how to trade better. But yeah, I sell software. I sell a software program, but that's not the only way we make our money. And we don't make money if everybody that we deal with loses money. They won't stay our members. So, you know, there's a whole collection of things that you do as an educator to try and get people engaged and learning and smart. And the key is you got to be able to do this yourself. I mean, if I'm not here, if there's no trade room moderator for a week, you want to be able to look at those reports, figure out which ones are good to trade them yourself and make money. And that's our goal. Our goal is to teach you how to do it, okay? And that's what we're charging for. We're not charging to guarantee that you're going to make money. We're teaching to we're charging to guarantee that we're going to try and help you and give you the tools to make money. That's the point of being an educator that teaches trading. Nobody can guarantee a profit because everybody does things differently. People make mistakes. People goof on the platform. I don't have to tell you, you're traders. You know what happens, okay? So let me go over a little bit about our company, the people that are involved here. Ranjit, we do have training. We haven't done a lot of brand new videos yet, because I know you remember, and I know you've had some issues where it hasn't been as easy for you. And you know, I would recommend that you try to come into the trade room as much as possible, because that's our best place of education. It's the place where we go over each individual trade before the trade. It's the place where we discuss why you might trade it differently one month than another month. And it's the place where our greatest amount of education takes place. So in answer to your question, there is new training. But that new training is constantly taking place in the trade room. And the trade room is a breathing, living entity, and that is the truth. It's totally dependent upon how good the people are that are spending their time in the room. It's not just me. It's other people with incredibly intelligent, trades, indicators, you know, just different concepts that they help us to learn in the room. And that's the beauty of the trade room. I'm not the only one that offers education. Our users, our members are offering a tremendous amount of education as well. And that's the key to the trade room. So Ranjit, I would love to see you in the trade room. I know that Brian got you started in this, and Brian is absolutely killing it with our system. And I know that he would help you also. So we want you to do well, Ranjit. So come into the trade room, let us help you, and we'll get you on track and get you going. Our system has really been doing well. I would say that our reports, we had a bad trade today. When I say a bad trade, I got stopped out for, I lost about, it was bonds, I lost about 5 ticks on the bond report. It wasn't even that we did anything wrong. The news report just moved the bonds in a way that just stopped us out. That happens. But that was the first bad trade, and I hate to use the word bad. It was the first stopped out trade that we've had in a couple of weeks. I had one other trade about 2 weeks ago. I lost $50, but almost every other report that we have given to our members has been a winning report over the last 3 weeks. And when I say reports, let me tell you how our system works. What we do is we trade on a schedule. We trade in a very organized manner. We don't have to sit and watch the charts all day. We send out a report every day before we have a trade in our trade room. So for instance, today, or let's say tomorrow, I know already tomorrow that there are going to be 3 potential trades. We've got a British trade, the quarterly current account report. I'm not going to get up at 4:30 in the morning and trade that, so I'm not going to run the trade room. I'm just too old, too tired, can't do it. But I will be there for the Canada GDP. That's an 8:30 in the morning trade, and I will certainly be in the trade room for the grain stocks report, which is a quarterly report, one of my favorite, potentially a very explosive report. Love it, love trading it. So here's how our system works. The day before the trade, you'll get an email from us, and in that email will be this report that we call the HIRA, a High Impact Report Alert. Tomorrow's Canadian GDP has a 15-tick stop. We're trading the Canadian dollar. I know that because the report says that. It's a risk 2 out of 4, so it's a medium to low risk trade, and we have a bracket of 5 ticks. I'll show you exactly what I mean by a bracket. Show you one of my favorite trades, non-farm payrolls, one of our best trades. We trade the DAX or bonds. Let me turn the sound off. I trade the DAX on this report. When I say that brackets will show up and that our report tells you how many brackets to use, you're going to see in a couple of seconds, brackets are going to show up on the trading chart. Those brackets, we tell you the day before how to bracket the current price of the trade. 3 seconds before the news is released, okay, the brackets, see how they show up? Actually, with the DAX, we enter a slight bit later. We actually enter 1 second before the news is released. There's our brackets. Current price is right in the middle of those brackets. And then the news gets released. Watch what happens to the index. This is the DAX index that we have studied, and we know for a fact that the DAX index moves dramatically when the non-farm payroll report is released. And look at that move. The trade is already over. 4 seconds after the news came out, the DAX made over $200 real money. It was a live report, not fake. I'll show it to you again. It happened so fast. Okay. It's so fast I can't find it. Here's the report. Bingo. The DAX explodes up to the upside. Ninja shows a profit, $200. Literally, that was a 6-second trade. Not every trade is 6 seconds, of course. The point I was showing is that our brackets showed up before the trade. Okay. Those brackets help you to trade the trade. Okay, in other words, we tell you, and there's the brackets, we tell you in the report the day before you're going to have a 5-tick bracket, and that's what this trade had. 5 ticks above and below current price. The news came out, the news exploded, it caused the DAX to jerk all the way up. In that case, it was good news. A lot of jobs were created. I made over $200. Again, 6 seconds, no joke. That was a real trade done in front of a lot of people in our trade room. And that's how our system works. That's one trade. We actually have 3 types of trades. We also have something called a range trade. A range trade is a trade that in the morning, for instance, oil tends to open and act a certain way. At 9 o'clock in the morning, the electronic pit for oil opens, and oil very often does a similar move. And it doesn't do it all the time, so this is the kind of thing where you want to test and make sure that the market hasn't changed. But it's called a range trade, and what's great about it is you don't have to do it on oil. You don't have to do it on the oil open. You could do it on a 30-minute range. You can do it on a 5-minute range. Here I'm doing it on a 5-minute range for oil. A lot of people like to trade the mini S&P between the hours of after 9:30 to 10 o'clock is over. A lot of people like to trade the breakout at 10 o'clock, either a breakout or a breakdown, depending on what the mini S&P does the first half hour of trading in the morning. That's what a range trade can do. You can design it. I call it a design your own trade, because you set the time. You set the time. You can tell it how long of a range, how many ticks above the range you want to enter the trade, how many ticks below the range you want to enter the trade, and that's what the trade does. In this particular case, it was an oil pit open trade. I was using a 3-tick bracket. Oil, you could see this was a 5-minute range. Oil was jerking around a little bit as the pit opened. Now it popped, it filled me, and then what you're going to see happen is oil is going to hit my first target, then it's going to hit my second target. And I think this trade took about 50 seconds possibly. Right now I'm taking a little bit of heat. I got filled. Now it's in my favor. Oil's starting to move. It's moving up a little bit. But I love this trade because people love to design their own trades. They love to do their own thing. No matter what I say in the trade room, people don't listen to me. They do their own stuff. They make up their own trades. It's just the nature of humans. They like to do their own thing. And that's one fantastic thing that the range trade lets you do. Lets you design your own trade. So here we go. Oil trade was over. The trade took 1 minute and 10 seconds. I had made $100, took very little heat in that trade, and that was based around the oil pit open. You could do the TF open. You could do the ES open. You could do the NQ open. Anything that you test that you think might be a viable trade, you could design a trade using our software. And that's a great feature of our software. When I first started here, our software didn't really do a tremendous amount of things. It did what it did really, really well. But I kind of thought to myself, you know, there's some things I'd like our software to do. So let me show you a couple of things feature-wise. I'm going to stop my PowerPoint just for a second. I'm going to boot up my Ninja and just show you the current JOBB software right now, and a brand new version of the software that nobody has. Nobody has yet. Let me turn down the sound. And what you'll see here, this is a brand new version of our software that is not available yet. And here's what our software is going to do. What I do is click on the, we call it our strategy chart. We have something called JOBracketBreakout. And we now have all of these new features. First off, we have safety features in our software. If you don't get filled, if a trade isn't going to work pretty quickly, we don't think it's going to work. So we now have a feature, automatically cancel the trade after X seconds, okay? Great new feature. It used to be you had to cancel manually. This entry range business, this controls all the range settings that I was showing you before, so you can design your own range trade. But now you can control the direction of your trade. If you want to trade just short, you can trade just short. That's something we couldn't do before. You had to trade long or short, and both parts of the trade were always on the chart. Now you can trade just long, or you could trade just short. If your analysis says, hey, I think that we're really going to go short on this news report, now you can go short. And you can do it just by choosing go short, okay? Short only. Great new feature in the software. Another new feature that we have, so now you can also choose breakout trade or range trade. You can also, we have total control over stops. Trailing stops were added, which is something everybody was asking me for. But another big feature is we now have 3 targets. We used to have just 2. You can have 3 positions, any number of contracts you want, 3 positions, and let's say target 1 is hit, you now have the ability to move your stop any way that you want. If you want to go to break even -2 after target 1 is hit, you just type in break even -2. If you want to go to break even, you just type in break even. If your target 2 is hit and you want to go break even +4, you just type in break even +4. So we've added great new stop handling, I think fantastic new features for the software. Besides all of the bracket trading that you saw that it already does, it has targets, it has positions, it has time-based trading, what time you enter the trade, all of that is controlled by our software. So a lot of new features that we've got going in our software. This version, I'm testing it right now. It'll be out a couple of days, literally. Our members will have it in a couple of days. So I'm really excited about it. I haven't even shown you everything, but very, very excited about the new software. New trade room, freetraderoom.com is very new for us. All of our trade room trades are placed on that site. And it's exciting. It's a fantastic way to always know what our schedule is. If you don't get an email, if you're just busy and you just haven't had time to check your emails, you can just go to freetraderoom.com and find out the current trades. Okay, this is our company. We did the risk disclosure already. We don't need an agenda. We already are going through it. Eric Spiker is one of our partners. He lives in Florida. He's been with the company almost since the very beginning. Jay Offner is our founder. Jay generates our reports. He's also in the military reserves. He's a submarine commander, which I don't know, I find that fascinating. To me, that's just amazing. He's lucky enough to live in Hawaii. He designs our reports. He designed the software. And Jay is a really interesting, nice guy. And everybody that works for JOB, good people. I really enjoy working here. That's me. I'm a musician. I'm a trader. I'm a regular guy, just like everybody in this trade room. That's the truth. I was a member of JOBB. That's how I found them, through another website. And I was always trading the news on my own, and I just wanted to find a better way to do it. And JOBB, to me, is a safer way to do it. So one of the things I wanted to show you, because time goes fast. Right now we're Ninja Trader only. We're adding new platforms this year. Those were the websites I showed you. But I've got this interesting way of trading that I think is going to be a fantastic way to make a lot of money trading with one contract. I've been testing it over the past week. I blew the trade today. I should have had a profitable trade today, but I exited too soon. And I didn't lose. I lost 1 tick. Should have made probably about 5. But let me show you how the concept behind this trade. I think it's really fascinating. What it does, it's a trade that trades with one contract. In other words, you don't trade. It trades with one contract, but even more important, it has no target. So I just have to find it. Bear with me. So you trade oil, for instance, which is an explosive, very potentially explosive index. And if you trade it with one contract, let me show you natural gas, which is even more explosive. This is a trade that takes place every Thursday at 10:30. Natural gas is one of our weekly trades. We do it every Thursday. And I'll show you how this one contract trade works. So the idea is, instead of putting how many ticks you think you're going to make on the trade, right? In other words, you create a position for your one contract, but instead of saying, well, I think natural gas is going to move 11 ticks plus our bracket, so you put in a target of 15 ticks. What if it moves 40 ticks? You've been taken out of your trade at 15, you've made $150, and your trade's over because you were only trading one contract. So my idea here is I'm not going to put a target in. When my trade gets filled, if the trade goes my way, I'm going to trail my stop as far as I can, following the index until I get stopped out. So watch what happened. This was a real trade 2 weeks ago. Natural gas exploded down. Now I'm going to take my stop, start to move it down, move it down, move it down, move it down. Eventually I'll get stopped out. Natural gas reversed. Now this was a simulated trade. I want to be honest. You would not have made $450. You probably would have made half of that because sims are filled much, much earlier than real life trades are. Sim trades don't have slippage. Okay, they don't have slippage. But the point is that this is a fantastic way to trade one contract and make more money than you would make if you were trying to decide how many contracts you were going to get in the trade, and you got that many contracts and then taken out of the trade. Had I just said, well, give me 10 ticks, I would have made $100. Trade would have been over, and I wouldn't have been able to keep trailing. Obviously, you need a certain type of trade for it to work. The bad thing, and everything can be bad, everything that you do has risk, but we have the bad thing that could happen is if you get a very fast reversal, you could turn a winning trade into a losing trade possibly. You could be up 10 ticks, and your trade could then turn on you and stop you out. That's possible. Okay, so that's one thing that could happen if things go bad. However, there's a way using our software that we can move our stop if, first of all, we have a break-even button. If the trade's profitable, at any time you're in a profitable trade, you can hit the break-even button and your stop automatically moves to break-even. So when you're in the middle of one of these one contract trades, you could hit the break-even button if you're profitable, and your stop will go to break-even. So no matter what, you won't lose money on that trade. But the other thing that our software can do is you could tell it, hey, if the market moves 7 ticks, move my stop to break-even plus 2 ticks. So if the market moves 7 ticks plus your bracket, don't forget you have a bracket, and you have to break out of that bracket to get filled. So if you have a 4-tick bracket above and below current price, and you have a 7-tick move to your break-even point, then you have to have an 11-tick move before your stop gets moved. Point being is there is a way in our software to protect yourself from a reversal so that if you're trading a one contract trade, your stop can be moved to a positive point. So if you do get a quick reversal, you'll get stopped out for a small profit and you'll live to fight another day. Try the trade again. On an explosive type trade is what you would use it on. Oil, natural gas, non-farm payrolls, reports that really move their respective markets. Okay, so it's just a very, very interesting way, a new way that I've been trading oil in our room and gas, and people have been enjoying it. It's been really, really great. The break-even button also is a great new feature. People are starting to use it, and they will use it. People that are testing it are using it. As soon as we release the software, people are anxiously awaiting that feature. Let me just show you a couple of quick trades because time goes so fast, folks. Believe it or not, we are almost out of time. It goes really quickly. I love this stuff. You could tell how excited I am about doing this. Here's a similar situation doing the same exact thing with oil. Okay. This was last week's oil trade. One contract. Okay, there's our bracket. Let me show you exactly what we do. So with our oil trade, we put a bracket on the chart, okay? Right before the report comes out. There's our bracket, okay? There's the current price. What happens is oil shoots up. My stop got moved. Like I said, how it protects you, and now I'm trailing my stop up with one contract. I'm still in the trade. I'm following that price up, following that price up. A very exciting way to trade, in my opinion, news, because news very often gives you this type of a move, okay? It doesn't always, and we have many, many trades where it doesn't. And just to give you an example, non-farm payrolls, these are real trades that our members have sent to us. $187 in profit from one member. Another non-farm payroll, $281 in profit. And you could tell it's real accounts. The account numbers are taken out, okay? I don't keep the account numbers in. Here's a Philly Fed trade. Philly Fed's pretty popular. Hey, you only made 60 bucks on that trade. Nothing wrong with that. Nothing wrong with making $60. Here's a non-farm payroll trade that a member made. Quite a bit of money. I don't know if I can see the money. There it is, 312 bucks. Not bad. I thought it was more. Here's a doozy of a trade one of our members made on non-farm payrolls. $1,300. Okay, it's hard to see, but trust me, I'm telling the truth. He made $1,300 on that trade. Non-farm payrolls. I am not making these trades up. Here's a very popular trade that we trade, ISM Manufacturing. That's a trade that comes out once a month. We trade it every month. The member made $118. I can show you trade after trade after trade that people are making money on. Australian jobs report, very popular trade. We trade the Australian dollar on this trade. $70. Hey, I'll take it. Nothing wrong with a $70 trade. Absolutely nothing wrong. Not every trade's going to be a $500 trade. Not every trade's going to be a $4,000 trade. It's the nature of the beast. Here's a non-farm payroll trade, 8:29. It takes place 4 seconds from now. Watch how it explodes. Wow. This trade was over now, literally in 5 seconds. 5 seconds. I showed it again and again because it happened so fast. Non-farm payrolls, literally a 5-second trade, and it was over. Over $300. That, for us, we have traded non-farm payrolls. I think our numbers are something like 14 out of the last 18 months we have been profitable on non-farm payrolls. Sky asks a question, do we have a problem with the broker opening the spread at the open of news? No, we do not, Sky. That's something that the Forex brokers do. That's why we don't trade with Forex. They're allowed to do that because they're not regulated. Futures brokers, Sky, are regulated, and they do not finagle the pricing before the news report. And that's the honest truth. You know, all the brokers will finagle things in other ways. They're certainly not your best friend. I don't have to tell you that. But the futures traders are the futures brokers are reasonably transparent. They do a pretty darn good job of not trying to rip us off. But I'll be honest, there's times you just want to tear your hair out because you can't figure out why they didn't fill you when they should have. And that's just the nature of any trading. With news trading, it certainly could happen where you think you should have been filled and you didn't get filled, or you got filled at a place where you didn't think you should have gotten filled. And that's one of the reasons our system is great, because it helps to keep you as safe as humanly possible when you trade the news. And that's why we love the JOBB software. Okay, so let me go through a little bit more of my PowerPoint. This is what our report looks like. Our members get these every day before the trade. I have one tomorrow for Canada GDP. I have one for tomorrow's grain stocks report. And our founder, Jay, designs these reports. And we discuss them in the room also. Sometimes I'll take a look at the report and I'll think to myself, you know, Jay hasn't been in the room for a while. Maybe we should have a little bit bigger stop on this report, because last month, the month before, and the month before that, it needed a bigger stop or we would have gotten stopped out. So our trade room is where everything flows from. Very, very important. Yes, Arthur, we are recording this and it can be reviewed in the future. If you want, email me later and I can get you a copy of it. But so our trade room is the most important place that you're going to go. And I tell our members, come to the trade room. You got to do it. That's where everything is going on. We change things. We change indexes sometimes. Sometimes we get a warning in the trade room that someone who's not in the room won't get. If, for instance, last week, or the week before, there was something that happened with oil that was so amazing. I wonder if I have it. If you give me 3 seconds here, I might have it and I'll show it to you. But oil moved 40 ticks before the report, and we canceled the report, and here it is. Here's what happened. If you were not in the trade room, you would not have known, you might not have known that this happened. You might not have known that it was a warning. Here was the warning. All of that movement was before our report and before our trade would have even triggered. That told us, do not trade oil June 14th. It's too dangerous. Something's going on to make it move that dramatically 10 seconds before the report was being released. And sure as I'm sitting here, if you would have traded it, you would have been stopped out on that report. Now, of course, it doesn't always happen that way. Sometimes it'll still work. But we have warning signs built into our software, and it's not so much that it's just built into our software, it's built into the way that we trade. We discuss it in the trade room, and that's the reason our trade room is so important. And we don't charge extra right now for our trade room. We are going to, I'll tell you that right now, in the very near future, our trade room will not be free. But it is free for members. And of course, that gets me into our sales part. I don't want to take extra time for other people that are coming after me. But, you know, you're probably wondering how expensive it is to be a member. The one thing I didn't show you that I still have enough time to show you, we have the third type of trade that we do, and it's called the trap trade. And we do a trap trade on bank report trades. We do the trap trade on trades that we think are going to burst up, pop down, very quickly. And let me see if I can find one real quick for you. Like, for instance, the Bank of England has a report that very often it will pop up, pull down. So it's a falling knife reversal trade. We call it the trap trade. And if I can't find one quick, I'll just move on to something else, because for some reason my files seem to not be in the place I left them. So let me look in one more place. I don't want to waste your time, because I'll be able to send you a video of a trap trade anytime anyway. It's just not that big a deal. You'll trust me. But I got one. So it's a trap trade. That's what we call it. The Bank of England, which is this trade here. What we do is we put orders above the current price. We put orders below the current price. And as the market is popping up, we sell the market. As the market is dropping down, we buy the market. And as the price reverses, while the market is buying, we might be selling. While the market is selling, we might be buying. So it's also a low slippage trade. It's a great trade. We call it the trap trade. The Bank of England is one of our most popular. I'll get to it here. There's the brackets above and below the price, and then you're going to see the trade is going to fill real fast. We're filled long. As the trade goes down, I'm buying the market, and then as it explodes up, I'm getting out of the market. It all happened so fast. I was up over $300 in Ninja, too fast for it to even show up on the profit and loss screen. That's called the trap trade. That's our third type of trade. And that's forgetting the fact that our software now has been updated, and you can use it just to do discretionary trading in one direction. So we've done, like I said, a lot of updates to our software. That's a trap trade. That's included in our service. So you get the breakout trade, the trap trade, the trade room, multiple computers that you can use your ID on. We are monetary friendly. We're not expensive. We will give you, for the rest of the year, if you join today, by tonight at midnight, we will give you the rest of the year's trade reports for free. So you want to sign up tonight. What do we charge? What do you think we charge for this? It's incredibly reasonable. Normally we charge $300 if somebody's a member, not a member. We're going to waive all of our sign-up fees, and you can sign up for $47, and then it'll auto-renew at just $97 a month. It's easy to quit. You just tell us you don't want to be a member anymore. You can do it yourself. So for $47, if you go to JOBracketBreakout.info, sign up before midnight tonight, we'll give you the rest of the year's reports. You'll be a member. You'll get our software, all of the software. You'll get free access to our trade room all the time. Here was an oil report one of our members made $4,500 on. No joke. So what we charge $297 for, you could do for $47. Go to newjob.info, okay? We'll give you the reports for the year. It's incredibly reasonable. Ranjit is asking me, do we still use NinjaTrader? Yes, Ranjit. Right now we're using NinjaTrader 7. NinjaTrader 8 is done. I have it in my possession. We're testing it. And we are looking at some other platforms for this coming year. I promise you there will be other platforms. I'm not sure how many yet, but definitely one, maybe 2 to 3. That's what my goal is. So it's not going to be Sierra charts, unfortunately. I don't think so, because I have other things in mind that I know I'm leaning towards, Ranjit. I'd rather tell you the truth because I know it. And it's not anything negative whatsoever towards Sierra charts. It's just an issue of our programmer, what he knows, what products we particularly really like, and what ideas we have for the future of the company. That's what it's based on. So it's nothing negative about Sierra charts. I'd love to support Sierra charts, but we have decisions we have to make as to what we're going to support. So again, go to newjob.info. This offer expires tonight at midnight, just $47. You can also get a free bonus, all the trade reports for the rest of the year. All right. If you have any last questions, I've got 2 minutes, folks. If you want to ask me any questions, right now we are trading futures. I do know people that do it with Forex, but you have to be careful because Forex brokers, they do fiddle with the pricing right before news reports are released. It's their nature. They kind of trade against you. Once your membership expires, Sam, the software expires too, unfortunately. That's the ninja business model, Sam. That's what everybody does. Nobody seems to sell software anymore. I personally would like to sell it, but it just doesn't work that way with Ninja. Everybody kind of rents their software. It's how it works. But we charge $47 for the first month. You can see if you like it. You can come into our room, freetraderoom.com, for free. Check us out. Come tomorrow morning, see if you like the trades, see if you like the way we talk to you in the trade room. I think you'll really like our system, and you'll like the camaraderie we have in the room. It's a great place. And then newjob.info, fantastic software. I just think I really love it. I've really had a lot of fun updating the software, coming up with new features, meeting everybody. I love the people. That for me is the best part. I absolutely like helping people. Rumaguro, I want to get you because you've come to all my webinars. I want you to come sign up with us. Check it out. I know you're interested. You've sat through my presentations. I know that news trading interests you. So one of these days, you got to just bite the bullet and come on in and see what you think. We do have a one-year special. Absolutely, Sam. We have all sorts of deals. We'll make you any deal. We're really reasonable people. We want you to make money. We want you to have fun while you do it. We want you to learn. And that's the way we do it. So folks, go to newjob.jobb.info, sign up for our service, do it by tonight at midnight, get those free trading reports, and I'll tell you, I think this is a great way to trade. Trading the news on a schedule. You don't have to sit and watch charts all day. What could be better? Great way to trade. So Juan, we did record this, and if you need the video, we'll get it to you. Just send me an email. Actually, anybody that's in this room, you're going to get a copy of the recording. I'm going to send it to you. So I want to thank everybody for coming. Rory, I'm not going to do anything because I don't want to shut down the room by accident. So I'm going to turn it over to you, okay? Is that all right?
Okay, Leigh. Yes, sir.
Thanks very much for having me, and I appreciate it very much. Good luck, everybody, in your trading.
Thank you, Leigh. I love that trap trade. Very exciting to watch. Pop up, fall down, great stuff. Go ahead, Rumi Guru, bite the bullet. Just $47. Love it. We're here with 5 titans of trading. Next up is Alla Peters of Fibonacci Trading Institution. And I'm just going to do a short bio. Let me make her the presenter and turn her mic on. Okay. Alla Peters has extensive knowledge of trading the markets. She has been developing and refining over the years since the 2008 market collapse, when she developed a remedy for the flawed fundamental analysis of many large institutional traders. Her dedication to constant improvement shows in her ability to convey her methodologies in a highly disciplined, rule-based trading system. Her methods apply to all of the markets, futures, forex, or stocks, and in any time frame that you normally trade. Ladies and gentlemen, it's my pleasure to introduce Alla Peters of Fibonacci Trading Institute.
Thank you, Rory. Thank you, traders. It's my joy and pleasure being here with you. In this webinar, I will be showing you and sharing with you how Fibonacci can improve your trading. I will be showing to you how Fibonacci is different from indicators, and I will be sharing with you favorite strategies I teach in the course. And my favorite part of the webinar, I will be answering your questions about the instruments of your choice. Please allow me to present. I hope to make it exciting for you. And please remember, think of the instrument you would like me to analyze for you and answer your questions. And please post the time frame next to the title of the instrument. For example, Apple Weekly, Euro Monthly, 5-minute oil. All of these questions I look forward answering after my presentation, which I will do my best to make it very short and sweet. First, please remember, never, ever, ever, ever trade with risks you cannot afford. Please note and review U.S. government required disclaimers at your convenience. And remember, all the questions I answer to educate you about the value of Fibonacci and price action. Until 2008, I was a very successful retired investor. I volunteered throughout the world, including working in Africa as RN. In 2008, markets were crashing and my world had stopped. I started questioning everything about the markets. At that time, I was still paying attention to fundamentals, and I was listening to CNBC when CNBC was telling me, remain long. This was one of the stocks I was holding, Chesapeake Energy, one of the leading energy stocks in US at that time. This stock was crashing and burning, and all the fundamental analysts had been telling everyone, hold the stock. This was the moment I've taken a major pause and started questioning everything about markets. This was the year I realized if fundamentals meant anything, everyone would have been Bill Gates. I realized very, very clearly that there is a lot more to the story as I started noticing that price action keeps repeating exact same patterns time and time again. I started spending time with charts and I started witnessing very, very clearly that market is flawless Fibonacci puzzle and price keeps repeating exact same patterns time and time again. The first strategy I developed by 2009, and in 2011 I decided to teach and work with traders from beginner to hedge fund trader. Here is the example of proprietary Fibonacci levels that had been present in our trading room for the last 7 years. Every single level in front of you has extremely high accuracy. As you can see, reversal zone on S&P monthly in 2016 was respected. This is where bullish rally had started. This was ultimate Fibonacci resistance, which we witness in a play in our trading room each and every day on short-term charts. Exact same accuracy applies to long-term investment charts. This is the charts I use when I work with institutions. Exact same identical formula applies to day trading chart. This is what been play out on S&P this entire week. Take a look. This was the end of the minor trend on day trading chart that's been in a play for a week. When price comes to this crucial Fibonacci support, you are never, ever, ever, ever tempted to short near. This is where buyers stepped in from on June 27th, and as spelled out days in advance, this is where sell-off had started. This is what you're witnessing right now. Absolutely no surprise, as reversal zone respected. Except this is day trading chart. This is a chart you use for short-term entries. Price action formula remains exactly the same. The only difference, how long you hold the position. Is it a couple of minutes or is it months, days and years? Choice is yours. This is the key to the market. If I remove the name from the instrument, pretty please do tell me, what instrument is this? Please guess. Let me know your thoughts. What do you think is in front of you? No one would know. Why would that matter? This is price action, traders. This is Amazon monthly. This is where Amazon is now. This is where Amazon had taken a massive pause. Bullish rally on Amazon taking a massive pause. Bullish rally in a progress. 1100 is next. Knowing where to enter, knowing where to exit your positions is essential. Speculating even in long-term holds are not an option. This is what I said about Amazon years in advance. Take a look. Remember Amazon in 2015 at reversal zone at 650? As I said, Amazon is collapsing to 500. That will be crucial support. That was a key point for long point of entry. Exact same formula I demonstrate each and every day in the trading room. You don't have to wait for days, weeks, and months to see the accuracy of the method. Price remains the same on everything. The only difference, risk management and trader's psychology. Being self-aware, what's appropriate for you, your psychological tolerance, your risk management is absolutely critical. And every time we have students sharing in the course who trading various instruments. Every single one of these levels completely proprietary. Every single one of these levels applies to any instrument, any time frame, any platform, and you can install on any instrument you choose. Here is an example on gold. This is a chart and been present in our day trading room for years. This is the gold levels right now, as these levels can remain in a play for the next 2 weeks or for the next 20 months. Strategy rules have changed, levels will change. Remember the end of the minor trend on Amazon? This was exactly same crucial support at the start of 2017 on gold. Remember where S&P collapsed from? This is exact same reversal zone where gold is struggling immensely this year. And I will show you multiple other instruments where you see these levels days, months, weeks, and minutes in advance if you are a day trader. You never, ever, ever acquire position near reversal zone. Remember S&P from day trading room and what played out here? It's exact same formula. It's exact same strategy. The only difference, this is day trading trend chart and this is long-term position trading chart, which our options use and investors and hedge funds use. Weekly levels. This is rule-based method. This is what helps you discipline. When you entering your trade using price action, when you exiting your trade using proprietary Fibonacci levels. As I will give you shortly link to YouTube channel where you can find multiple examples on the YouTube channel going back years. So what is Fibonacci and what separates Fibonacci from indicators? Even Einstein mentions Fibonacci in his relativity theory. Even Einstein mentions Fibonacci in Genius series that currently on National Geographic. Fibonacci is mathematical sequence that shows you that every single thing preset in nature, every single thing preset in the markets. You're finding Fibonacci golden ratios in everything that surrounds us. That starts very, very clearly in seashell. That smallest spiral is exactly how C-shell involves, is exactly how market forms. And this is a formula that was discovered by Leonardo Pisano in 13th century. And this is exactly what I show each and every day in our trading room. As you can go back to YouTube channel and witness videos going back years. And this is exact same patterns that are present in financial markets. This is the key Fibonacci markets. This is what forms the markets. This is what forms the trends. Doesn't matter if you're trading 5-minute S&P, doesn't matter if you're trading 4-hour euro or weekly ETFs or stocks or options. Golden ratios is the key to market structure. This is how trends form, using exact same formula as you see in front of you on C-shell, which is always present in front of me on my desk, which reminds me that market not a chaos, that market is Fibonacci puzzle, where price action patterns form repetitive Fibonacci waves, which can be capitalized upon in any market. So what is the difference between Fibonacci and indicators? On any platform I ever came across, Fibonacci are not placed under indicators. Fibonacci placed under tools. And this is a difference. Fibonacci is naturally predictive. Indicators are not. Indicators are artificial. Fibonacci is mathematical sequence. Indicators formed after price action most of the time already formed the move. Once you learn Fibonacci rules, once you learn Fibonacci formula, you will become better each and every day. As long as you play by the rules, as long as you do not block your vision, you can trade on any platform, any time frame, any instrument. If you're lucky enough to find the indicator that works, good for you. It probably works only on certain instrument and certain time frame. Here is the chart of one of the favorite instruments of hedge funds. 2015 at hedge fund convention, I'm meeting with pretty arrogant, very young hedge fund manager who says to me he started his hedge fund loading up on Apple. 2015, Apple had stunning earnings. And I say to him, bad idea, Apple at reversal zone. Why in the world would you start hedge fund with Apple? He says, I cannot lose on Apple. Everyone buying Apple. Who cares what Fibonacci says? Apple collapsed 40% despite stunning earnings. In the year 2016, Apple came out with the worst earnings in 13 years. And I say, my bias is bullish. This is Fibonacci support. I don't care about horrific earnings. This is the place to enter long. If you know the rules, if you understand that Fibonacci will override any indicators, any news, any earnings. How many points, how many dollar figures till Apple skyrocketed? Look at that. Apple is up 60%. But this is exactly what I said years before that rally has happened. Take a look on Apple. Remember that support? That's where Apple was rallying from. Remember that hot pink line? That's exact same level where S&P had been dancing for weeks. Remember this support? If I will remove the name from my chart, you wouldn't have a clue what instrument this is. You master price action, you master Fibonacci. All you have to do is identify what instrument is appropriate for you and your account. As Apple in brutal bearish correction as expected. Testing your knowledge of the rules. Spectacular earnings do not matter. This is a key support on Apple now. This is institutional support. If this support is out, Apple will collapse to 123. Level present in the room for the last 4 years. Speculation never an option. If earnings and fundamentals meant something, everyone would be Bill Gates. And that's picture-perfect example. And that's the reason I love oil news. We always bring up oil news to our Fibonacci trading room. You can see my video from yesterday during oil news on the website. Oil did not have a good news. Oil had bearish news, remember? Exact same hot pink support is present. What do I say? My bias is bullish. Negative news does not mean a thing. What do you see on Apple and oil? Exact same thing. Very powerful reminder. Fibonacci reversal zone is present. Do not take trend position. Price will reverse 85% of the time. And that's oil only yesterday. And that's long-term oil that's been present in the room for years. Again, long-term charts are institutional charts. Remember reversal zone on oil at the start of the trend? This is the end of the minor trend. This is institutional resistance. Bullish trend is weak. Price had not been able to break through this level. If this level is out, oil will go into free fall. Every single instrument, exact same formula. The difference is risk management and trader psychology. Here's my favorite event of 2016. It never gets old, I promise. I live and breathe Fibonacci, and this was flawless reminder. Election night, we're having a ball. My students are much smarter than Soros. They did not short the markets because Trump won the election. Fibonacci reversal zone is present, your bias is bullish. Rules are met, take long. Rules are not met, do not touch the market. Market will stage at least bullish correction. And as you could see, this is where bullish rally took off from. The biggest bullish rally since 2009. Fibonacci did not care who won the election. Reversal zone is present. Your bias is trend will reverse. Drastically more accurate than any news, any fundamentals, any earnings will ever be. And that's the reason I named this level reversal zone. And that's the reason I keep this level very, very hot pink, that you would never ever ignore this Fibonacci support and never ever ever short near. Last time I liked this level when I was 5.5, which was very long time ago. And take a look on one of my favorite charts. Hardly anyone nowadays trades Forex. I hope you saw what happened with FXCM, and I hope you understand it is the most expensive market on the planet. Unless you are in third world country, unless you are holding position for a long time, it's extremely easily manipulated. The most expensive market that there is. I go into accounting, I go into expense in the course at all times. It shocks me how few traders know that. Take a look on Euro and take a look on what Euro said years ago. I love the screenshot. Students call this screenshot peacock. Remember Euro 3,800? Remember what I said before I left on vacation in 2014? Remember the hot pink support at 3,400? I said that would be next That's what was holding the key on collapse on euro. Euro broke through this support on weekly. Take a look where euro is now on monthly. Look at that. I said in 2015, this is crucial support. Exact same support that respected on Apple. Exact same resistance that oil struggled to break through. Monthly chart, not weekly. Identical formula. Identical bullish rally on oil monthly as collapse on euro, as respect on euro monthly. This support on euro had never been broken. Never ever short near. What you trade, absolutely up to you. Tomorrow I teach long-term Fibonacci class. In the course we have beginner traders, we have hedge fund traders. I will show you information after I answer your questions. I work with software developers all the time who ask me about price action. Price action is a key to the markets. You understand price action, you can trade anything. This is what I teach in the course. This is what I start with. This is all that matters. Naked price and Fibonacci. Each and every day, markets show you where to enter and where to exit. This is a chart of one of the students who've been trying for 20 plus years, spending over $400,000 investing not into the knowledge of the markets, but investing into investment in indicators. Very first question I ask you when I start working with you in private mentoring, show me what you traded before. Show me what have you used prior. If you decide to join us, it means you are ready to master price action. It means you are ready to unblock your vision. And this is all that matters. Fibonacci is highly accurate, predictive mathematical sequence. It is not an indicator. It will give you highly accurate profit targets on any instrument, any time frame. In day trading, each and every day I show you one tick makes a world of difference. Only Fibonacci can give you levels, minutes, hours, days, weeks, and months in advance. All depends if you're a day trader or if you are in position trader. That remains the key, and that is crucial. If you come to the website, this is my favorite part. Listen to what students trade. They trade anything and everything. Fibonacci formula remains the same. Look at that. Ed trades options. Sam trades stocks, futures. Anything and everything. Hedge fund managers, beginner traders joining us in the course. We have a ball. That's all that matters. I love to teach. I love the markets. I love Fibonacci. And that's what I show every day in our trading room and in the course. Fibonacci cannot be traded if you don't know the rules. You cannot randomly put Fibonacci on your chart and start speculating. It will never work. Knowing precise entry, knowing precise Fibonacci placement, knowing precise stop is the key. Fibonacci can only be used if rules are applied. And when rules are applied, Fibonacci can be used on any instrument, any time frame, any instrument, which give you opportunity to trade with clarity, which give you uninhibited view of the markets, which give you no conflicting signals. That's absolutely the key. Pure price for entry and Fibonacci for exit. And this is what I teach in the course. And this is a key strategy that keeps repeating itself time and time again. And in a play on S&P in front of me right now. Here are the basic rules. This is what I'm teaching tomorrow morning at 11 a.m. in Fibonacci class. Major trend forms of 5 Fibonacci waves. Knowledgeable trader takes advantage of trend inception. Fibonacci wave 1. Take a look. Anybody surprised what S&P is doing right now? As S&P is the most popular day trading instrument in US, it's a reversal zone. No surprise. If you're buying as low as possible, you understand this is a key. Buy trend inception when rules are met. Short trend collapse when rules are met. The worst place to be? Wave 2. Wave 2 is overextended bullish push. Wave 2 is when you do not touch the market. If you choose to participate in the market on wave 2, you are very aggressive counter-trend trigger-happy trader who will trade with much lower success rate. Conservative trader walks away from the screen. Conservative trader not touching wave 2, looking for opportunity to enter on wave 3. That's it. No other points of entry, traders. Wave 1 and wave 3. You're not buying overextended end of wave 3. It will never work. If you do, this is what happens. This is exactly the key. Look on S&P daily. Look what we've been dealing with. Boom. Anybody surprised where bullish rally had ended? Hot pink line. The most important Fibonacci resistance ever present. As I said, Juan, every single example I gave was on multiple instruments, multiple time frames. You never, ever, ever use word daily on your chart. You need every single second on your chart. You cannot miss 1 minute of data. If you do, you're trading against yourself. This is the levels that have been displayed in the room days in advance. This is institutional support. When reversal zone on your 1 minute chart, 5 minute chart and hourly correlates with institutional support, you do not leave the screen, and you never short near. Exact same levels I've shown to you on gold, oil, Apple, Amazon, and euro. Price action is exactly the same everywhere. I remove the name. It wouldn't matter what the title is. What you choose to trade is your choice. Never, ever, ever buy into hot pink line. Ever. It's ultimate Fibonacci resistance. And that's what happens if you choose to acquire position at the end of wave 3. Your success rate less than 20%. It's never an option. In the course I teach you quality trading. I teach you not to succumb to instant gratification. I teach you how to be gem hunter, how to play by the rules. Fibonacci keeps you out of trouble, and Fibonacci show you exact same structure on NASDAQ. 5-wave major trend. Do not become greedy. Do not buy at reversal zone. If you do, your success rate less than 20%. And that's exactly what happened on oil. I love, love, love this chart. This is a chart that's been present in our trading room, which we bring up every single time before oil news. One of the most spectacular bullish events on April 12th, as recorded and posted on my YouTube channel, and my bias is bearish. As I say, each and every time. Fibonacci reversal zone is present. I don't care what the fundamentals, I don't care what the earnings or what the news events are. My bias firmly bearish. OPEC production cuts did not mean a thing. Oil collapsed 1,000 points. Are you surprised what oil is doing right now? Boom. Absolutely no surprise whatsoever. Hot pink resistance is present. Do not ever buy at the end of wave 3. You are a day trader. You adore this level. On 3, 5, 11, whatever minute chart you trade. You learn to trade with institutions, never ever against them. Levels present in the room since 2016. This is what you take advantage of on your little baby charts. Or you want to trade hourly, you want to trade 4 hour, you want to trade what options trade, why not? Choice is yours. Absolutely up to you. That's the key formula to the markets. Market is that simple. Exact same formula in a play on euro. Don't get greedy. Don't buy the end of the trend. Do not enter position in the middle of the trend. It will never, ever, ever work. Never forget that. Oil, exact same formula. Levels respected. And that's what price does each and every time. Even on Google 1-minute chart. Flawless market structure. Price action will never ever be more clear than this. That's a price structure market keeps repeating. On Google Weekly, Google Monthly, Google Yearly, Google 5-minute, Google 11-minute, Euro, Pound, ETF, anything. The only difference, instrument liquidity and your risk management. Are you holding position 5 minutes or are you holding position 5 months, 5 years? Choice is yours. And that's what I teach in the course. That's what I've done since 2011. Students from beginner to hedge fund trader in US and abroad. Right now in the course we have stock traders from Florida, futures traders from New York, options traders in Beirut, in Qatar, Forex traders that I'm trying to convert to other instruments because it never ceases to amaze me that students do not know that spending $20, $30 per round trip is extremely expensive to trade. And that's all that matters to me. I teach you how to fish. You decide what fish you want to catch. Every single thing you learn is completely proprietary, based on precise rules for entry, stop, and target. In the group course, I teach everything on S&P Mini. In private mentoring, I concentrate on instrument of your choice. Absolutely up to you what you trade. Students' audio testimonies adding each and every day, exponentially. Everything posted on the website under Learn. Key Fibonacci class tomorrow at 11. We start new course from scratch on July 5th. If you ever have any questions, please do not hesitate to contact me, as all classes are live in online course with supplemental modules. In the trading room, we meet Monday through Thursday, with the exception of holidays, which is next weekend. Strategy classes on Monday, with the exception of holiday weekend, which next week will be on Wednesday. Long-term Fibonacci class at 11 a.m. on Friday. Every morning we meet with students before trading room open, which open for the visitors and you will receive invitation for. Course 8 weeks, expanded from 4 in case you get sick, in case you take a vacation. Private mentoring 16. I highly encourage you, if you are interested, review the information first and feel free to contact me at any time. I always look forward to hearing from you. I always meet with students in US and abroad. Last month I met with students in Asia, in New York, in California, in Singapore. This was our last meeting in California. I'm in the middle. Michael, option trader and day trader. Scott, full-time doctor. William and Amy, option traders, stock traders, and futures traders in New York. Students everywhere in US. This was meeting in Singapore with Daniel. So Ladies and gentlemen, I look forward to your questions. Pretty please ask me about instruments of your choice. Question about futures. I'm not clear what that question means. I've shown multiple instruments on S&P mini futures. The chart that you witnessed in front of you on ES is S&P future, the most leveraged, the most popular day trading instrument in US, which is extremely powerful as long as you know the rules for entry. 30-year bond on 3-minute chart. Excellent question. So again, please confirm, is the bond still on July contract? That's the only thing. As I'm bringing up Instrument Manager, I love answering your questions. Bonds. Which bonds, please? 30-year bonds? 30-year Treasury coming up. Let me install the instruments. Pound JPP daily QQQ. Thank you, Brent, means the world. Thank you, thank you, thank you. Any other questions? No other questions I can install? Yes, I will bring up yes again. Any other questions before we go to the charts? I will not be going back to Instrument Manager. Okay, let's roll. Again, for the first question about ES. I brought up 5 charts on ES. Here's a chart from trading room that's been present in the trading room since the start of the website in 2011, when I said bullish rally will head until this reversal zone. This was bearish correction in 2014, 2015, no surprise. Exact same place where you saw gold collapsed from, oil collapsed from, Apple collapsed from. This is S&P monthly. This is what you can benefit from as long-term investor. As I said to you prior, and I will gladly repeat myself, this was key Fibonacci support on monthly. This is your key Fibonacci support that you can listen to at current student who had taken advantage of this support with options. This is also key Fibonacci support on monthly, which is a chart you use if you're holding position for years, that correlates very, very clearly with reversal zone on weekly. Remember that number? No surprise. And that was day trading chart and videos you can use on YouTube channel where I demonstrate the trades from 1 minute and higher. Boom. Anybody surprised what S&P is doing? Should not be. It's a reversal zone. It's the exact same thing where a knowledgeable trader takes advantage of day trading entries. You don't need to wait for weeks and months as you saw on weekly and monthly. You see it instantly in day trading room. Next question is bonds. No. QQQ was the first one. QQQ coming up. Again, you never use word daily on your chart. Before you ever place a trade on daily, you're paying attention to weekly. Never ignore weekly. Here is QQQ. Love it. Music to my ears. No one asked me about QQQ in months. Take a look. My goodness, is it possible what QQQ is doing? Absolutely. It's a reversal zone, ladies and gentlemen. QQQ is heading to 131. What you're witnessing in front of you is what states very, very clearly in book Outliers. If you combine 10,000 hours of effort and passion, you create magic. I never imagined in 2008 that I will become obsessed with Fibonacci. Imagine what's possible if you unblock your vision and you start doing the same. Each and every day you will become better. Each and every day you will remember. Doesn't matter if you trade 5-minute chart, you never, ever, ever, ever disrespect the end of the minor trend, hot pink chart. You never, ever, ever, ever buy into reversal zone. What QQQ will do at institutional support at 131 is a key. You know the rules, you know what you're monitoring for. Out of 27 students today in the course, 4 on MT4. And you can listen to testimonies from Forex traders. However, Steven, if you're trading Forex, I will educate you a lot more about Forex. So pretty please put FXCM on Google. There is a whole lot more surprises to come from Forex markets. So let's go to QQQ on daily. Again, traders, you can easily find my information on the website because I live and breathe what I do. You can call me anytime. You will be amazed. People faint when I answer the phone. It's the funniest thing ever. Please remember, most of mentoring days are booked until next year. If you're serious about private mentoring, you need to call me and I will let you know what I have open. Do not sign up for private mentoring without speaking with me first. So here we go, QQQ daily. So everybody is clear on correlation between institutional levels before you ever place a trade? First class tomorrow at 11 a.m. you will realize that market is Fibonacci puzzle. Look at that. This is QQQ daily. As you can see, QQQ on daily correlated very, very clearly with reversal zone on weekly. Larger the time frame, more powerful the level. QQQ also had shown you on daily. Bullish trend is weak. This is the end of the minor trend. QQQ continuing drastically further down. Sellers simply taking a pause. This is a brick wall. 141.81 identifies the end of the minor bullish trend. This is a level that shows you that buyers are weak. Let me remind you again, in case you missed. This is exact same thing that happened on oil. Do you remember that level on weekly? Never ignore. Bullish trend is weak. Institutional chart. Everything in US market, EST. You sign up on the website, you will be in the class automatically. Everything automatic on the website. Next question is GBP JPY. We have 15 minutes. I love your questions, traders. Pretty please do pause. I get depressed on long weekend holidays because I live and breathe what I do. GBP JPY 1440 minute coming up. Again, you never place a trade on daily without paying attention to weekly. Do you understand that? Look at GBP JPY and look where the problem is currently. It's all about hot pink level. That's exactly the reason I made it so hot pink. FYI, my background is psychiatry and psychology. Psychiatry is where I worked and where I'm from at Johns Hopkins Hospital, where I worked for 8 years managing and working in psychiatric unit. Psychology is everything in life, traders, and it shows you Fibonacci will keep you out of trouble. Do not buy into this hot pink line, which only girls under age of 5 should like. Boom. Doesn't matter if it's oil, if it's S&P, if it's Apple. It's the most important Fibonacci level. It's a brick wall. Bullish trend is minor. What price will do next is absolutely crucial. Your bias is bearish, not bullish. Rules are met, you take a short trade. Rules are not met, you are not touching the market, you monitoring pullback and entering long point of entry, nowhere near this level. Your bullish trend will become major, you monitoring for your point of entry here or here. This will be next brick wall, and this will be following level. Fibonacci levels are always present, trades are not. Knowing where to enter, knowing where to exit your position is the key. Next question, 3-minute bond chart. The most spectacular day trading instrument, the least expensive and the most profitable, bonds, which show you if you are trading bonds, you're extremely educated trader. The least cost per transaction, the biggest profit. Spending $3 to $5 round trip, you're making $20+ per tick instead of spending $20 to $50 per round trip on Forex pair, making much less. Never cease to amaze me how traders don't know the difference. Before you ever place a trade on 3-minute chart, you identify your trend levels. This is what happened on bonds daily. Look at that. Bonds selling off. Your institutional bias is bearish. Let me remind you why. Because the reversal zone had been reached. No indicator on the planet will give you these levels days, weeks, months in advance. If 1-minute chart is giving you long point of entry, but this long-term level is present in front of you, you never, ever, ever buy near. This is where bonds are heading. But knowing where to enter, knowing where to exit is a key. If you're trading daily, you are an options trader. You never, ever, ever hold futures overnight unless you have 7-figure account, because you understand margins 10 times as high in overnight session. You understand what happens if market gaps. Those are the basics of trading education. I address that throughout the course. So, bonds hourly is a chart you use to trade 3-minute chart. You pay attention to this. As a day trader, structure right now is drastically different. As a day trader, this is where bonds are. Look at that. This is very powerful reminder. You have a trade on 5-minute chart, you never ever ever short near hot pink support. Ever. Your success rate less than 20%. Remember where euro is sitting for 2 years? Right now, this crucial support is ultimate resistance. 3-minute chart is giving you long point of entry. You look on your hourly levels and you say, I am not a trading cowboy. I am not a clueless trader. I would never, ever, ever buy into this Fibonacci resistance. I am not driven by instant gratification. This is your channel. This is your support. And this is your resistance. You buy low, you sell high. And that's how you stay out of trouble. I use DOM, which anything and everything in life worth paying for. Anything and everything that's free on a platform is against the trader. I don't know anyone who uses chart trader, as it's only blocking your vision. In private mentoring, I work on your execution, as we have complete beginners traders who are becoming very powerful traders, because in private mentoring, I get to work on your execution, on your bracket order placement. I constantly show you the difference in settings on your platform between limit, stop limit, and bracket orders. How you execute in day trading makes a world of difference. It's at least 50% of your success. Not something I can teach you in group sessions. When I work in private mentoring, I log in into your computer. You log in into mine. Any other questions, traders? My joy and pleasure. I answered all the questions I see. If you do not have any questions about any other instruments, my joy and pleasure being here with you. Please review on the website all the information about course, underlearn, and never ever hesitate to contact me. info@fibinstitute.com, 925-257-4298. And please review video examples from our trading room, updated multiple times per week, multiple trades going back 6 years. And again, my favorite part of the website, always and forever, what graduates and students say about course. As you can see very clearly. Multiple students trade anything and everything, from futures to stocks to options to Forex. We just finished favorite event of the year, Fibonacci Trading Bootcamp, where graduates of the course came in and shared what they trade. Graduates of the course who finished course 5, 6, 7 years ago. My joy and pleasure. Traders, thank you so much. Look forward hearing from you. Next week, you will be receiving trading room invitation for the trading room. But because it's a holiday week, please remember, just in case, check your spam box. Make sure that you add the email to your inbox on Wednesday morning. And again, we start from scratch on Monday. But if you sign up tonight, you will be in long-term Fibonacci class tomorrow morning, which I go back years, all the way to 2008 on S&P. Show you what's possible if you use Fibonacci. Exact same formula applies to day trading charts. Thank you, Rory. Thank you, ladies and gentlemen. If you do not have any other questions, I am out.
Thank you so much, Alla. Very intriguing, even mesmerizing. I'm sure your course is incredible. I'd love to learn more about your incredible system.
Thank you, Rory. It means the world. Thank you so much. Thank you, Brent. Thank you, traders. Thank you, Rory. I live and breathe Fibonacci. I look forward to hearing from you.
Great presentation.
Thank you so much. Thank you. Look forward to speaking here again. Thank you, Rory.
Thank you.
Bye-bye.
Bye-bye. So we are bringing quality information from the Titans of Trading. This is Series 2. We had started with 5 presenters here today, and number 4 is coming up next. The next presenter is the definition of persistence and dedication. Randy Lindsey of Hawkeye Traders. Randy began trading in 1987 with just a newspaper and a calculator. Now he owns one of the best trading software systems available today. We're very thankful, very grateful to have Randy Lindsey of Hawkeye Traders. I'm going to go ahead and switch it over to Mr. Randy Lindsey. If you just bear with me for just a second. Randy Lindsey. Sorry about the delay. Make presenter. Yes, here we go. Randy, are you there?
I am here. Can you hear me okay, Rory?
I can hear you just fine. Great to have you.
Awesome.
Thanks for participating.
I appreciate the invitation, and it's always good to be speaking at your events and to work with all of your students. It's awesome to be here.
Thanks a lot. Thanks again, Randy. Go ahead. Take it away.
All right. Well, thank you guys for being here. My name is Randy Lindsey. I am the owner of Hawkeye Traders. We focus everything that we do on volume. And the focus of today's topic, I'm going to be telling you how to use volume with price to predict market direction. It's the fundamental aspect of trading that everybody really needs to have a handle on. Everybody has access to it, but nobody really knows how to use it. So I can show you a very instrumental, very fundamental tool that we use to identify not only intent of market direction, but how you can take advantage of that market direction in your own trading. Okay, so let's go through that very quickly. Just want to make sure we understand that this is for educational purposes only, that Hawkeye Traders and myself, we are not registered trading advisors, so whatever I say should only be construed as education. There is a great amount of loss in trading in these markets. Make sure you understand what those losses are, and that you never trade in a live trading account unless you have first proven you can consistently and profitably trade in a simulated account before you start putting real money on. And then once you start the process of trading live money, that's where the real work begins, because then your mind has to get into the play. So it's all part of the process, and we understand that, and we teach that at Hawkeye Traders. But today I want to give you a very brief introduction to what volume trading is all about. I'm going to go over and give you a background of what volume, an introduction to volume itself, why it's so important. I'll give you lots and lots of examples on multiple platforms, even if you want to see that. And of course, at the very end, I'll give you a very special offer just for participating and being here in the class today. All right, so traditionally, most traders, between 70 to 80% traders, are failing. They usually use traditional trading strategies, MACD, stochastics. These are all the popular ones, Elliott Wave, Bollinger Band stuff. These are moving averages. These are all indicators that are free to all the traders on most of the platforms, and they give you what the traditional traders usually do. They see indicators that are traditionally lagging in time, and so they develop a much slower than average response rate. Volume is so important because volume really is the only leading indicator. What I mean by that is that volume will always precede price. It shows the intent of the market. It signals that intent. It signals price movement before it actually occurs. It shows when the buying activity is accelerated, when there's a large number of buyers, when institutional buyers start stepping in. All of the keys of these are revealed through volume. Also, I found out that volume on triple time frames, really is the key. So I can go through and show you that more in an example later on, but for right now, the examples I show will prove to you that it lowers the risk and it gives you much more confidence in taking trades once the alignments occur. So me as a trader, 1987 is when I first started looking at trading. 1990s is when I became very proficient at trading, and I started making a whole lot of money. Of course, in the late 90s, you could probably trade blindfolded and still make money because of all the dot-com tech stocks that were going up. I made plenty of money to buy a house, pay off all my debt, buy several cars, and then convince myself that, oh, quote unquote, I'm a great trader. But the dot-com bubble burst, and I found out very quickly I wasn't all I thought I was, and I blew up several trading accounts after that. I started losing confidence in myself. I started following every Tom, Dick, and Harry out there. I started buying every indicator I could find to try to help me get back in the seat. Where I wasn't, it just didn't work. I was very inconsistent in my trading. I was very inconsistent in the markets. I would bounce from stocks to options. I even tried Forex, and I blew up 2 Forex accounts. I just couldn't get the hang of it. I couldn't understand why I was doing so well before, but now I'm not. And then I started looking at all of my loss. I started learning some valuable lessons. If those who don't learn from the past are destined to repeat it. So I started to apply myself and started learning. And that's when I started finding things like Hawkeye. I came across Hawkeye Traders in, I think, in 2005. I started learning about trading with volume and price. And the secrets that I learned about volume helped me to find the missing link I was always looking for, and that was, of course, volume is the key. And volume traded on triple time frames really does give me the confidence that I needed to get back in the saddle and to start developing a trading plan that was consistent and consistently profitable. Okay, so let's learn a little bit more about what volume is. Volume really is the only truly leading indicator. Professional traders use volume to determine the investor's intent in the market. It's their way of understanding accumulation prior to a momentum or a distribution prior to their downward move. So our volume indicator, the Hawkeye volume indicator, performs these types of analysis on the market. It gives you the ability to see professional buying and professional selling, whether there's demand or no demand, and it gives you insight and a lot more confidence. Okay, so standard volume spread analysis, which we'll go into a little bit later. Back in the 1930s, a stock market operator, he's got a guy named, you probably have heard of him, his name is Richard Wyckoff. He took volume and he analyzed it, and he found that predictive indicator, which he called the Wyckoff volume spread analysis. Well, there are a lot of other traders back in the day who found out about that and started using it. Jesse Livermore, J.P. Morgan are amongst the many wealthy traders that use that type of approach to trading. But since then, and even up until today, it's been acknowledged that volume spread analysis is an extremely good leading indicator. Okay, so volume spread analysis doesn't really just consider the open, and what I want to talk to you a little bit now is the opening price principle, just to kind of step back and look at what volume does for you. Okay, so Hawkeye considers that the opening price is of paramount importance. It's very similar to an auction process. If the auctioneer stands up in front of a crowd and has something to auction out, and he says, can I get a bid at $100? And nobody waves their paddle or raises their hand or anything. And he says, can I get a bid at $90? And he continues to go down until finally someone thinks, okay, I can buy that for this price. He finally gets to $40 and someone's paddle goes up. Okay, I've got a bid at $40, and then the bidding starts, and someone else says, okay, I like it at that price, so they'll take it 42 or 43. So a price will probably end up around $45, maybe even $55 before it settles down and is actually sold. Now, on another day, another product, another subject comes up. Can I get a bid at $100? Instantly, someone's paddle goes up because they see value in that product. So the opening price sets the stage. The price will probably rally up to $110, $120 before it's even eventually sold. So you can see the opening price is extremely important. And so when you're looking at that relative to price action, and you integrate that with the amount of players who are out there on the table, it really sets the basis for the entire session. It helps you as a trader to understand and to know the intent of that market session. Okay, so let's look at this. When we integrate volume with price, you're going to be getting something like this. You see a standard volume bar. We've got the open, here's the high, low, and close. This is considered the range of the bar. Okay, you've got the open and close relative to that range. All right. And then the volume spread analysis looks at the overall distribution of all the trades that occurred during the formation of that price bar over whatever time frame that price bar was formed. So integrating volume spread analysis, the profile or the overall distribution of the volume that's accumulated over that price bar, we then get what we refer to as volume price analysis. We're looking at the distribution coupled with the open, high, low, and close of every price bar to determine that yes or no, there's a large amount of buying or selling going on in that price bar. And so what the Hawkeye algorithm does is it goes through 300 calculations every single price bar to determine the presence of buying, selling, or no demand or neutral. And then we color code those for you to make the job really easy. Red indicates sellers, green indicates buyers, and white indicates that there's a neutral buying going on. So it's a culmination of over 20 years of research. It's more of a sophisticated way of trading because it's like forensic analysis rather than technical analysis, because you're really feeling and seeing your way through the undulations or the underpinning of the market as it breathes. And you can actually see the trades much more clearly. It gives you a way to perceive the charts, the overall structure of the market. It gives you a way to place your trades. It shows you how and where to place your trades, how to keep your profits, and how to protect your positions. And I'll show you the specifics of that as we go on into more details, okay? But we're going to look at some specifics now. Want to make sure you understand what we're looking at. So when I look at the red volume, this is the Hawkeye volume displayed down here. Red identifies selling pressure, green buying pressure, and white is a neutral or an equal distribution. So if we were to go back to the previous chart, if we were to see this, then you can see how this distribution was skewed to the lower part of that price bar. Okay, so, and you can also see that the close is in the lower 30% of that price bar. So it's very clear to see that there is a very heavy selling pressure on this price. Price is going down, and you can see that the close less than the open, volume weight is in the lower part. It's really easy to see that, okay? So when we get to this, we're looking at that red, identifying that that has a lot of selling pressure on that. But then you see a neutral price bar here. Here you see a white price bar, a white volume bar, where the price has a very weak signature. You can see it opened at the high, but then it traded way down, but it closed way up in the upper 30% of that price bar. It wasn't enough to decide that that was a buying bar, but this obviously had a bunch of sellers and a bunch of buyers coming in all at the same time. And then after this, you can see there's a bunch of neutral price. So there's it's a battle going on here. You can see that within this range, there's some selling, some buying. There's an attempted rally, and then it faded, and so forth. And so you can see the price value comes in here until this point right here. Okay. Oh, this is the opening of the market. Sorry. This point right here, you can see that there is a big price extension up into new price highs, but with opposing volume. You can see it's painted red. You can see that the average volume of that bar is greater than the previous volume bars coming into that point. So you can see that there is a marked intent of the market to move the direction of this price. This is very attractive to sellers, not to buyers, and the volume is showing you that and painting you that. Now, I have the price bars colored the same color as the volume to help you to see the volume and price interaction. Okay, so taking advantage of that is key. It also helps you to see that if this occurs and you are in a long trade, this is a great place to be taking profits off the table. And that's important to make sure and note that anytime you see a price extension with opposing volume, that means that the volume color is contrary to the direction of the price, then this is a key reversal point that you want to take note of and try to take profit in, okay? So volume also helps us to understand the health of a trend. So you can see right here that this is an uptrend, but you can see that the volume itself is kind of choppy. It's going back and forth between buying and selling and neutral and buying and selling. So you can see that there's a bunch of low volume and it's not a lot of real attractive volume. And the price is just trading in a range that has previously been established. So range-bound trading, choppy volume, shows you the strength of that trend is weak. But notice what occurs after the intent is made in volume. Okay, price starts to rally down. You start to see larger selling volume as price starts to go down. Notice the neutral, but then as price starts to drop, notice you have responsive selling. So you got selling pressure coming in, responsive price action. Okay, and a very weak attempted rally to come back up again. So volume is increasing, but you can see that the increasing volume is all neutral. So you have equal number of buyers, equal number of sellers. Price isn't really interested in going back up. But as soon as you start to see price going back down again, look at the volume starting to increase. When you see increasing volume, decreasing price, that means a lot of sellers are starting to step in and get involved in this market. Okay. When you see that activity, you know that that's occurring. So any attempt to buy should only be seen as a corrective move. Any attempt at selling then is greater than the previous volume coming in for the buy. It's like it's writing on the wall. It's telling you ahead of time that there is a large intent of the price and volume to move this market down. And you can see that once the break below the previous low occurred, accelerated price action, a large increase in selling volume started coming in, and we're off to the races. So it's important to see that these volume radar indicates the extreme presence of volume or the extreme lack of volume based upon the color of the indicator itself. So volume is really key on that, and I want to make sure that you understand and know that. Price do attempt to rise and to fall at faster or slower paces based upon the presence of volume. So looking at the magnitude and the relative reaction of price is really key to look at that. If you see a very large price bar, but you see really low volume, that means something. If you see a normal price bar, normal volume, that's expected. If you see large price bars and large volume, that's normal and expected. So those are all meaningful things to take note of. But anytime you see something that's kind of out of the ordinary, out of normal, those are also very important, and we should exactly show you and teach you how to look at that. So right now I'm giving you the fundamentals of that and what we're looking for, okay? So let's go over and look at some live chart examples. I have 3 platforms set up to show you. I'm using TradeStation, NinjaTrader, and MetaTrader 4. So I will start off on TradeStation, give you some examples of what we are looking at. Looking only at volume. Okay, volume really is key, and we want to make sure you understand it and know that. So what we're looking at here is the S&P 500 continuous futures contract on a 3-minute, 6-minute, and 12-minute. Notice I was telling you about multiple time frames. So this is what we're looking for. So when you see price coming right back down, I'm watching for these extensions. These are very long, wide price bars. These bars are extending down into new lows, and they're accelerating to a certain point, but notice that the volume starts coming up, and we start to see what was referred to as a climax of volume. Okay. Then when you see that the overall acceleration and trend of that volume changes, okay, then you can see that the color and the buying activity starts increasing. Buyers start stepping in at this. This is an attractive price. The close closes up in the middle of the price bar, and then you see the very next price bar coming right back up, and then boom, it breaks the downtrend that's established at this point. You see consolidation, you see more buying coming back in, an attempted sell-off, but look at the volume magnitude of that sell-off. Weak, very weak. So what is that telling the astute trader who knows volume? It's telling you that this price is going to continue to go up. Continue to go up. So absolutely. So at that point, boom, the trade's off, the trade's up, and you can see the very nice trend. Once you see that that trend is broken right here, by the end of the day, there's always going to be a huge volume surge at the end of the day. Your trade's over. You hold for the end of the rally of the end of the day. So almost always occurs at the end of the day. So those are some things to look at. If you look at the longer time frame perspective of this same rally down, then you can see the same 6-minute, and then when you look at it on a 12-minute chart, then this right here is like a giveaway. Okay, price rallies back down, and you can see the huge amount of buying activity that pops right back into that, and you know that there's a clear intent of directional change coming into that market. Okay. Forex, there's a problem in Forex. A lot of people identify and know that there's no a lot of people say there's no volume in Forex, and that is, you can say that's correct. There really is no house that stores volume like for futures or for stocks or something. There's no real clear indication of that. But we can still do the exact same type of volume spread analysis using tick data, and that's what we do at Hawkeye. We are able to capture and look at all of the tick data that's available and do all the same exact analysis of that to determine the presence of buying pressure or selling pressure on any price bar, and it's about 80% accurate to true volume. Okay, so we've been able to document that, and we have a very good record showing the usefulness of volume in the Forex market. And here I can give you a couple of really good examples today on the Euro-Yen, looking at a 3-minute, 6-minute, and 12-minute chart. You can see that price rally. You can see the big wide, we call this a wide bar, but it's twice average true range, so we paint it purple to identify that that is a significant price bar. And when you see that significant price bar with buying volume down here in these very attractive ranges, you can see that there is a clear intent that, the price might be very attractive to buyers. It's no longer attractive to sellers, because look what happens after we see that. That big buying action comes in, the sellers start to go neutral. Any selling attempt after that, you can see a very large attempt to sell, but price just does not respond to that. Once you finally see price coming back down again to these same attractive levels, huge amount of buying volume comes back in. You see response, and you can see that the price stabilizes. You go into an accumulation distribution cycle, and then off to the races. Okay, goes right back up to rally into the close of the day. Longer term time frame, you can see again, back earlier this morning, you can see when the London session opened up, you can see that there was a peak, there was a sell-off, another attempted double top with a sell-off, a check, and a down move. And then you can see the closing buy off of that buy. So you can see where profit taking is being entering into the market, where profit taking or heavy selling enters into the market. So it's very easy to see and to understand that. I got a couple of questions here. The red, selling due to market moving lower or selling due to profit taking. It's not real clear as to whether it's profit taking or if it's initial trading. That information really isn't available to us as traders, but what we do see is, like I had showed earlier, we see a clear distribution over each price bar. We know where buyers are, we know where sellers are. We know that the intent of this is to push price up to attract retail traders to trap them into these highs, the new highs of the day, and then price rallies down very quickly to try to trap retail traders here, and then the institutions go ahead and try to trade and to push that price back down again. Once they're trapped in, they stopped out, then they start accumulating back up all of those stops, and it's the market maker's game, of course. But volume shows you the intent and what they're trying to do, and if you are a volume and price student, then you see that, and it's an edge that you have in the market. Not just in Forex, not just in futures, but it's also in equities as well. Here's a chart showing a longer term. This looks like a daily, weekly, and a monthly chart showing Apple, one of the most widely traded stocks around. If you are a stock or an option trader like I am, then you're going to be looking at these, and you're going to be understanding that why price does what it does, why it does it, where it does it at what price level, and then the extent of that. So at this point, you can see that price is rallying up and is coming up into a very nice high point for Apple. That was a very sweet spot for it, all-time highs. Okay, but you can see that as price was coming up into these values, we're not seeing the volume that we saw back earlier. When price was breaking out, you have a nice little cup and handle here, and then a nice breakout. You can see rallying volume coming in, huge amount of buying activity coming in, driving price back up again, okay? But as soon as you saw this peak price right here, notice what price did. Volume started declining rapidly, and price went nowhere. As a matter of fact, if you look real close at those price bars, you can see that closes are less than the open in the middle part of that bar. So those are very weak bars. Now price still can continue to go up on weak price bars, but when you start to see volume declining, okay, over those price bars, that's a sign. And then when you start to see a huge amount of selling activity, like you see right here, coming back in, and responsive price, very responsive price action, that's got to tell you that something's in store for this, and it's starting to show some real weakness. Now, after that price bar came in, you can see price rallied and started to go into a typical accumulation distribution. So you started to see distribution coming in. People who had taken profits all the way up to this point are doing that right here. They're taking off, they're changing out, they're covering themselves, or they're getting out of the market altogether. All right, and then you can see that any attempt to rally back up was met with, followed on with selling pressure. Okay, buying, weak, and then boom. You can see the big sell-off, and then we're stabilizing here. Again, we're starting to see consolidation, another accumulation distribution cycle coming right back in again. And what's the outcome going to be? Right now, the outcome doesn't look too good for Apple. So we're watching that as it comes on. This helped me to identify the weakness in the trade. I currently own Apple stock, so a full disclaimer there. I currently have purchased puts on my Apple stock because I don't want to get rid of it, but I want to protect it. So when I saw this channel and this distribution coming in right here, this was a shot over the bow that helped me to identify the 155 puts on Apple for purchase. So I started collecting those and buying those at these levels, and the higher the price went, the better price I got on my 155 puts until the price rallied back down again, and then you can see I'm over $10 up in all of my puts that I purchased for the 155 strike. And I'll continue to hold those until I see a break above the 148 level. But that's how you use volume to help you to see and to understand your trading and to profit from that, to know where to put your stops or where to take your profits at. It's very clear to be able to see that. Martha wanted to know, did I actually take the ES trade today, the entry bar earlier? Okay, if you look back over at the actual chart itself, then you can see I traded the S&P today through scalping. So looking at the volume and price, I took several different trades today where I was looking at the acceleration of price and volume together. So this volume spurred me on. I saw the trend was intact. I was able to take the trade. I met a profit target. You can see right here, this was a loss because it looked like it was going to go back down again. But I stopped out, and then I was able to get right back in and come to a full profit. So you can see that that occurred twice, 3 times, and then I was able to take profits. So overall, I had a very good day trading off of the S&P just on the intraday chart. And then from that intraday chart, then I was able to trade the other markets as well, the YM, the NASDAQ, and so forth. So that's just intraday trading. So I supplement my longer-term position and options trades with shorter-term stock trades. Volume really is the key for doing that because you see where those turns occur, and you're able to trade those relative to the time frame that you're trading, whether it's time charts, tick charts, or whatever. If you're trading in the Forex market, I've got a MetaTrader 4 platform showing you the exact same setups that we were looking at earlier, where you see the double bottom buying activity of price coming right back into a nice rally up into the end of the day. You can see the double top selling activity, okay, on both time frames. So it helps you to see the overall intent of the market and what it's doing. Notice how price rallied. Notice the overall color of volume here is mostly accumulation. Then you can see prices rallying it down, trying to get better prices, trying to trap retail traders into selling this, and then it shoots right back up with a huge amount of volume. So right at this point, you can see a huge volume spike coming right back into a very large price bar and buying activities. So price extension, opposing volume, breakout trade, and rallies. Okay, so volume is really a key, and if you understand volume and you understand how to apply it, it's going to take the edge out of trading. It's going to give you a lot more confidence in your trades, even if you use it with other instruments. So if you take the volume tool and you apply it to other instruments like the moving averages, so if you put a MACD on there to show you where the crossover occurs, if you're using moving averages, there's one right there. If you can throw on your ADX, you know, anything that helps you to identify setups, then if you see that volume is supporting the move, okay, when the setup occurs, you can see 3 price bars, 4, sometimes 4 or 5, then that helps you to trade with a lot more confidence. All right. Are there any other questions for now? Because I want to go through some more examples and look at some more analysis. If there's any specific stocks or equities or futures that you want me to look at, any Forex pairs, I'll be more than glad to analyze those for you and show you the outlook of what volume is telling us right now. I'll be more than glad to do that for you. The 30-year bonds, okay. Let me see, I know I've got that over here. That is the US, okay. First I'll look at the longer term to give you a good look at that. So here's the 30-year bond. You can see we've gone into a nice channel up, and then when you see these uptrends that are broken, and put this trend line on just to show you what I'm talking about. You connect the dots, basically you connect your pivot points. Then you can see when the trend line is broken by opposing volume, then that's a clear break of what we're looking for. So a break of the bond, the bullishness in that bond showed you that we're starting to take on water. The price is starting to go down. You can see equal buying and selling of the price, and so once this bar closes, then you'll see the true tenor of what that market's looking like right now. But right now, the overall direction of the bond right now has broken its uptrend, is in a corrective mode. We need to see where it goes beyond this support level, if it breaks down anymore or what. But right now we're seeing definite weakness, a close lower than the open. It's marginal whether it's in the lower 30% of that price bar or not. So this might be a neutral price bar. It might be right on the edge of selling. So right now, the longer term trend on that bond looks to be weak. You can see that the overall trend was down, slight correction, but the weekly is still showing an uptrend. The monthly showing a lot of selling pressure, but it's still showing a very, very small corrective trend on an overall uptrend. Okay, so it still shows overall strength in the bond, but shorter term weakness, and so we're looking at that as correction. All right, dollar yen. Well, let's look at that shorter term, unless you just like the longer term outlook of it. But the dollar yen. So I can pull that up. US dollar yen. All right. Volume in the Forex does not go beyond daily. So when you're looking at longer term, we can still do the intraday full analysis and give you the actual coloring, whether it's buying or selling, but we can't give you any magnitude information about that. You have to look intraday if you want to look at the volume magnitude on the Forex market. Okay. You can see on the yen, we're clearly here in a uptrend on the shorter term daily market. We have broken out above that, but we can see overhead resistance. We are in consolidation, and we are also in a choppy consolidated range on the monthly. So you can see clearly we are range bound, and range bound, shorter term uptrend. Looking at that intraday, the Japanese yen, US dollar. Okay, US dollar, Japanese yen, 6 minute, 3 minute. You can see that very easy to see reversal points. Okay, when you can see price coming up into the highs of the day with extremely low volume, and then you can see volume starting to get extremely large and responsive on the down move. It's easier to see and to make note that that trade is starting to rally, and you can see that when that price is broken with opposing volume, okay, then that gives you a clear break of trend and a resumption of trend in the opposite direction. So no volume coming in the long side gives you an idea that it's not going to continue that way at all. Then when you see that that rally down is met with buying volume at a very attractive price, then that downtrend then becomes over, and you start to look at price starting to either correct back up, accumulate, distribute, and then resume on an opposite direction. Now this is a bad time of day to be trading anyway, but the Tokyo session is going to be opening up here in a couple of hours, and so that's the dead zone for trading in Forexes right there. The S&P 500 tomorrow. So let's look at the longer term, and then we'll look at crude oil with that too then. The S&P 500 longer term, so you're looking at the daily chart. See what I'm talking about there? Anyway, you're looking at a very bullish trend. Okay, that trend hasn't been broken. We've seen some corrections, we've seen some sideways action, but the trend is still intact and is still looking good. Right now we're seeing a very extended period of correction. We're starting to see price breaking down, but we're still locked in a congestion range between our two isolated highs. These two yellow dots identify isolated highs or lows in the market, and whenever you see price trading within those ranges, we wait for those to be broken based upon our pivot dots to make sure that we're out of that range. Okay, so those are automatically drawn. The Hawkeye pivots automatically draw those to identify the congestion range and where we're going to be looking for a breakout, either long or short from this consolidation. So tomorrow, we just have to see. We closed back up inside the range today. We tried to come out, but buying activity came right back in again. So it's inconclusive right now where we're going to be from this. Based upon the weekly and the monthly, you can see still clearly bullish, and we still have clear bullish buying activity coming in. The only thing I'm a little concerned about on this, and it can still continue, is that you've got rising price action with declining volume. Okay, that's usually an indication that this is coming to an end, but it's been going on now for 2 years. See that, 16 and all the way into 17. So it still can continue on like that. So on a monthly chart, it might or might not be relevant, but when you see a declining volume with rising price, that always is a little worrisome in the longer term picture. And crude oil. All right, daily picture for crude oil. Okay, you can see that we've come out of a lot of consolidation with weakness. Okay, you can see where price decides to be done. Okay, when you see these extensions, I'm telling you, when you see these things, price is trying to tell you something. Volume is trying to tell you that price wants to go in that direction. And when you see those, it stands out like a sore thumb when you identify them and understand how to trade those things. So when you see these same channels broken, okay, and you see price breaking those channels to the opposite side, then it's very clear to see the intent and where you're trading off those. You connect the dots again, either here or here, here or here. See, this one was broken with green volume, not valid. See, this creates a new low. This one was broken with red volume. That's a valid break. And you can see that's the key break right there. It comes right back up to that same trend line, tests it, and then breaks down below again. So here you have a nice smooth move from that. You can do the exact same thing if you're analyzing these things all the way across, one trend up or one trend down. You see these volume turns and you see the trend lines broken. That gives you clear entry points. Now we're not calling the lows, we're not calling the highs, but we are trying to get the meat of any of these trends. And with very simple tools, you can easily do that. The other Hawkeye tools that we use show exactly when these trends occur. So we can see very clearly where the selling action occurs from a breakout, where the buy points are on any of the directional trades. And so we use our trend dots and we use our momentum tools. We use our alignment tools for the multiple time frames to give us signals where the alignment occurs for the entry points to get into the trades. When we start to see sell-offs toward the end of the day, we know, okay, that's the time to start getting out of the trade, and so forth. All right, so it's really clear to see that. And then we have another tool called our zones that helps us to see where supply and demand come into play. And you'll be seeing that here in about half an hour when the APAZones guy comes on, because these are basically the APAZones applied to the Hawkeye tools. So you'll be seeing that here in just a little bit with the next speaker. All right, so as far as the direction of crude oil, where is it going right now? Right now, there's weakness. There's a lot of weakness. We are in a nice downtrend. All right, so we are not seeing any reversal signals. So this simply looks like a correction for a continuation down. If we were to look at the weekly chart, you can see that there's a huge amount of selling pressure on crude oil to drive this down. We can see we can go all the way down to the previous point where price became attractive, which was about 39.35 to the downside. And you can see on the monthly, it's going to give you the same picture. You've got price coming down to a low, rounding over, and then coming right back down to retest the prior low, and that prior low was about $39. All right, so there's a very good possibility we could revisit that 39 or even go below it, because look at the amount of volume trading on that, okay, relative to where the volume had traded prior to that. Okay, so there's something going on in crude oil right now, and right now the news is not good for the direction. So trading in the overall direction of the longer-term trend will always give you much better results in your overall trade. If you're using volume, the recommended trading time frame for Forex, well, that depends on you as a trader, because I can't specify you. It will really depend upon the leverage you have and the size of your account and all that stuff. I don't know any of that, so I really can't tell you the best time frame to trade. I do know that volume works on any of these time frames, so I've shown you that you can still see and use volume on very fast scalping time frames or even on very long time frames. So whether you're trading even on half day, a quarter day, half day, and full day charts, you can still see the application of volume is still very valid. And when you see these trends come into play, the identification of the trend, the direction of the trend, coupled with volume on multiple time frames, then it's very easy and clear to see that these signals align where you have the highest probability and the lowest risk trade entry points, okay? Whether it's to the upside or to the downside. So volume works on any of these time frames regardless of the market that you're in. Awesome. Yes, Sven, I'm looking forward to meeting you in London as well. We are having a London seminar, and we'll be coming and putting the Hawkeye's tools there. So I look forward to seeing you there, Sven. Absolutely. So RL says that the dollar-based crude is going down to put fear into the Soviet Union with a little smiley face. Possibly. It's hard to tell because there's so many players in the crude oil market. It's a very global future. So yeah, it could very well be. I'm not sure. Absolutely. Yeah, Wayne. The dots that you see are isolated highs and lows. What an isolated high or low is a pivot. We refer to it as a pivot, but as a true isolated high or low is where the low is lower than the previous low and the next low, and the high is lower than the previous and the next. Okay, so those are true isolated highs or lows. A phantom, like you see right here, notice there's not a dot on it. The high is higher than previous index, but this low, the low is not higher than the next one. See that? This low is lower than this one, so this is not considered a actual isolated high, so we don't paint the pivot on that. So we use the pivot on a bunch of our tools to help us to identify congestion channels, trading ranges, and whether we have entered into a consolidation range or not. Are there any other things you want me to analyze? Because otherwise I want to make you a very special offer that I hope that you can't refuse. But normally on our website, if you go to HawkeyeTraders.com to contact us or find out more information about us, at the bottom of any page, if you click on Contact Us, then you'll be able to find out more about us as traders and a little bit more about our company. But if you were to go over to our store and find out the suite of tools that we sell, then you can see that there's one listed here that's called the Hawkeye Starter Package. It's $360. That's what we sell it for every single day. But I have an offer for you right now that if you were to take that, and let me pop that back up here real quick, that I'm going to offer for you that same Hawkeye Volume Starter Package. Okay, that Volume Starter Package includes the Hawkeye Volume Radar, the Volume Paint Bar. It also comes with the Hawkeye Pivots, those yellow dots. It comes with the wide bar. Gives you access to our inner circle, our Skype chat room. Gives you all the full written and user documentation and trading rules. Access to our full membership site, with extensive on-demand video libraries. All of that is included, plus you're also going to get a bonus 2-hour on-demand volume training course that shows you exactly how to use this volume starter package with your current indicators that you're currently using. Not the ones that I was showing you earlier or all the other tools that we use to make our trading so much easier. But it shows you how to use it with the tools that you're already used to using. And it's a full 2-hour on-demand course you can take in trading time, okay? All that's for only $97. Not $360, but $97. It's a one-time fee. There's no subscription attached to that whatsoever. There's no upsells or anything else like that. It's just a chance for you to get Hawkeye Volume going. So if you go to the website, HawkeyeTraders.com/starter, and let me put that in the chat box there for you real quick. There you go. You can click on that chat there, and that link in the chat box, and then that'll take you right to the site. And that'll give you an extremely good discount on getting started with volume. All the indicators I was showing you earlier are part of that special package, and I'm showing them to you here too. You get the Hawkeye Volume. Okay, the Volume Paint Bar. That's the one that paints the color of the price bars. You get the Hawkeye Pivots, the Hawkeye Wide Bar. Let's see, there's one. Here's the purple bar that you see that shows twice the average true range. And those are important because what usually occurs during a twice average true range bar is that price usually is sucked back into the volume of that bar, and it usually trades in the opposite direction. So you can see that right here is another one. Price came back down, sucked right back up into that body, and then proceeded to trade back up to the top. So if we see the top or the bottom of that bar broken, that's usually where we see the true trend direction occurring. And so we teach you exactly how to trade with that. So the pivot, the wide bar, the Hawkeye Volume, the Hawkeye Volume Radar, and the Hawkeye Volume Paint Bar, all are included. The Volume Radar are these small dots that are painted on the volume to show you significant volume events. They currently are supported for TradeStation, NinjaTrader, and MetaTrader 4. NinjaTrader 7 or 8. So we support both NinjaTrader 8 and 7. Okay. Volume is the cornerstone of everything that we do at Hawkeye. It is our foundational software. So we basically are giving you the keys to our kingdom and teaching you how to use it in your own trading. It's just hard to go wrong with that. So apply volume and you'll have the edge in the market. And if you're a Forex trader using volume, you're going to be up over 80% of the other traders out there who don't use it at all. Okay. Non-time-based charts could actually be used. That's right. Tick charts, range bars, Renko bars, very Renko, special Renko bars. Yep, that's right. Volume bars and so forth. It works with them all. Absolutely. Scott, are there any certain time frames we want to use the volume analysis, or can we use the analysis on any time frame we want? Absolutely, you can use it on any time frame you want. If you already own it, oh, awesome. Thanks, Gary. Do you have a special to upgrade? We absolutely do. If you send me an email, support@hawkeyetraders.com, and let me put that on there for you to see, then I'll be glad to give you a link to do for a very special upgrade price to give you full credit for that. Not only full credit, but if you bought it for 97 bucks, then we give you a full $360 credit towards the upgrade price. So you get to keep your full discount. Yeah, that's pretty sweet. All right, Stephen, good to see you. Awesome. Well, thank you very much for being here. You have the Hawkeye total package for MT4. That's awesome. How would I have read the Hawkeye volume to allow me to take advantage of the Euro-US dollar surge towards about 230 pips? So let's see. Tuesday's London Open. Let me pull that back up and take a look at that. Looking at the Euro-US dollar, I'm going to pull up my hourly chart to see if I can go back to that point. Excuse me, Tuesday was the 27th, so we are looking at Tuesday the 27th. 1, 2, 3, 4 price bars coming up into the opening of that range were all buying activity. You can see that the price extension right here was showing clear identification on the 26th. That price didn't want to go down anymore. All right, you can see that the rally physically started here, okay? Right? But remember what I was showing you earlier? Anytime you have a trend, okay, a trend that's marked by a series of ups or downs or these pivots, and when that trend is broken by opposing volume, in this case you've got a huge volume buying spike here, that's a breakout. All right, and so if you didn't get any of these other signals here to take this trade, where the Hawkeye tools probably did, because getting this trend right here, I can already see that the breakout at this point right here probably would have generated an entry signal. Then you would have definitely gotten an entry signal right here following those same tools. So volume, volume, volume leading the way, showing you that this was moving up. NinjaTrader, both NinjaTrader 7 and NinjaTrader 8. Yes, sir. So if you buy it for one, you'll get it for both. We're just good like that. How do you inform us what platform you use? When you go to the buy page, if you were to go over and click on the starter package right there, okay, then it'll go down and shows you everything you get, and you have access to click on either the TradeStation, NinjaTrader, or MetaTrader 4 platforms. So that's how you tell us out, just by clicking on the right button. Make sure you click on the right button. If you make a mistake, though, I can fix it. That's no problem. You're very welcome. How can it work with range bars? Well, I can kind of show you how it works with tick bars, very similar anyway, but using in tick count, you can see the price bars on tick count. You're using it on range bars. Let me see, I don't have any range bar examples here. I've got my other chart set up using range bars. Using on wrinkle bars actually is really sweet, because wrinkle bars is just kind of like a modified tick chart anyway with range bars, but you do a fixed set, and it doesn't have any problem keeping up with that. And it actually shows the volume accumulation. And when you put these pivots on with the volume, they almost stand out like sore thumbs on these range bars. But I'm sorry, I don't have a chart set up to show that right now. So I'm going to have to wave on that one. And we're getting really close to the end of my session, so I don't want to bowl over my friend Gabriel with any of my time. So I'll have to defer on that. But if you contact me at my website, HawkeyeTraders.com, support at HawkeyeTraders.com, then I'll be more than glad to provide you with an example of that. Okay. I do not have a live trade room. Nope. We have training rooms available where we train live. We show you our trading, but they're not every single day. So they're just one day a week. Absolutely. All right, so then I'm out of here. www.hawkeyetraders.com/starter will get you started with that volume starter package. And right here is how you can contact me. Team1@hawkeyetraders.com, or visit our website at www.hawkeyetraders.com for more information. All right. Very much. If you have any other questions, that's how you can reach me. So thank you very much for your time and your attention today. You had a lot of really good questions, and thank you for stretching me on a lot of the analysis that you did, but it was pretty fun for me, so I appreciate that. Rory, it's back to you.
Thanks a lot, Randy.
You're very welcome.
Randy Lindsey, thank you so much. That's Randy Lindsey from Hawkeye Traders. Great guy. I've spoken to a few members of yours, Randy, and they've just said incredible things about you and your trading system.
Ah, that's great. Awesome. I appreciate that. Thank you.
Yeah, they say that you're extremely dedicated. You're on Skype every morning taking trades.
I am. All right. Thanks a lot. Appreciate it.
Thank you. I'll tell you, Randy Lindsey started with a pen and a calculator. Incredible. Next on our second edition of Titans of Trading, we have a special guest. We have Mr. Gabriel Brent, a very short bio. Gabriel Brent is the CEO of Alla Zones, an extremely successful trader. He's been trading for over a decade. He's a very intelligent guy. He's personally programmed the majority of Alla Zones products, which include the artificial intelligence neural network. He teaches price action classes at UCLA and has mentored many successful traders. Here is my friend Gabriel. May the trend be with you, my friend.
And the same with you, brother. So thank you for that kind introduction there, and thank you for everybody else who's stuck around here to the last little bit of today's wonderful training session. And I'm gonna get real with you guys here in just a little bit. As always, realize that everything we're doing in the markets, you know, there is substantial risk of loss, and with what I'm going to share with you today is just the tip of the iceberg into what I feel is price action trading, and named the company Advanced Price Action because when I saw what I saw in the markets, and coming from more of a developer and a programmer type of perspective, once this stuff clicked for me, it was absolutely amazing, and I'm hoping to share with you some really cool things. Just out of curiosity, I'd like to do a real quick little poll here, and if you wouldn't mind typing in the chat box, what is everybody looking at trading these days? Are you into futures or Forex or stocks? Let's just get a little sample of what everybody's coming into the room with. All right, cool. Thanks, guys. I really appreciate that. All right, so I'm going to show you something that I think is absolutely amazing, and I've actually never shared this with a group before, so you guys are the test subjects. Here's a little picture of myself, and there's a little disclaimer there as well. So you guys are the test subjects for what I call basic price action trading. And it looks like we have a ton of futures traders in the room here. Okay, so that is very, very cool, guys. All right, so with that being said, I'm just going to start off with a very, very basic platform here. I'm on this platform called TradingView. If you guys have never heard of TradingView before, it's a web-based platform. I think it's super duper cool, and it's open to everybody. When I'm teaching the classes at UCLA, I actually teach remote. So we do projectors and all kinds of stuff, and we all use TradingView just because it allows us to get on the same page, and the students can share their charts with me and vice versa. It's really, really handy in that sense. But what we're going to talk about is very, very basic patterns that I have found in the market, and I hope that these will be very, very obvious to you as well. All right. Now, first things first, let's start off with some basic price movement. Okay. I'm sure probably many of you here know that the market moves in waves and cycles, right? And let's just go ahead and draw some of these normal waves here. All right, so market goes up, the market goes down, all that kind of good stuff. Now, what I'm really driving for is the beginnings of a strategy, if you will, so that when you put it together with the basic concepts of supply and demand and knowing where is high and where is low, you'll be able to predict out the market really, really well. Okay, we do a lot of this prediction stuff every single week here at Appazones, and push out these videos like here on the I saw a lot of forex traders in the room too. So here on the Euro USD, you can kind of see a little bit of our view here from the past few months. Sorry that the resolution's a little grainy here, but we're looking for price to come up, and the little neural network says that everything's pushing to the upside. We'll get more into the little neural network here after I go through the patterns that I want to share with you guys. But it's really, really cool how price moves over time and how it kind of does the same thing over and over again. Yeah, it looks a little bit different, but we're going to tell you how to get over that variable change in the marketplace, okay? So we all know that market moves in waves. Now, right before it, a lot of times will correct to the downside and then continue on its way up. You'll see the price staggering around here, okay, and consolidating. And I like to call it consolidating and then expansion, all right, in between each one of these waves, all right. And the wave to the downside could be a whole lot bigger, you know. I just kind of drew it as such, but it could be something like that too, all right. So I was talking to a physicist friend of mine, and we're looking at energy things, and we're noticing the same type of energy stuff on our scopes, where energy tends to move, okay, in great expansion, or travels really hard and really fast, and then it stalls out and consolidates or stands around, and then it moves again, okay. So if you want to call it traveling and standing, or if you want to call it consolidation versus expansion, it doesn't really matter. If you want to call it accumulation versus distribution, same type of thing. Pick your terminology there that you want to use, okay? So what we really want to get down into is, how do we know that the market has done something, or how do we know that the market has failed to do something? I think is super duper important as well, okay? So again, coming from a very logical perspective, hopefully this pattern is going to make sense. And I'm just going to start off with this little pivot point that we have down here. Now, this is going to take us into the beginnings of what we like to call the price action school. It's a 4-week class that we provide, and we'll get into more details here a little later on. But basically, this is what I like to call price action failure. All right. So when we have a new low, all right, like we have a new low down here, we're going to wait for a green candle, all right, to come up there. The first green candle, then the second green candle, and as soon as we see a red candle come down here, this red candle, in my mind, is the retest of this low down there, okay? Now, what this sets up for is getting a little complicated, but it's basically the base derivative of price action. All right, you will always see this happen. Price will make a new low or make a new high, and then you'll get a retest of that. All right, and this red candle right there represents the retest of that price level, of that overall low that we saw down here. Okay, so that's what we're looking at here. I'm just trying to keep things super simple. Let me put on the little spotlight just so that maybe you can see my mouse a little bit better. So this low is actually being retested by this first red candle here. Now this red candle I don't really consider counts, okay, because it's an inside candle. It's another red candle that's inside this really big one. It could have continued on through, but we got a green candle, and the highest point in between where this red candle is and this low, I put a little line in the sand, okay? Now, this will work for all kinds of different markets. It's really, really cool. I'll show you some on the stock market as well here in just a few minutes. This happens to be on the Euro USD, okay? But regardless of market, it always works out, okay? And so as we're looking at this thing, what we need to do is realize that this line in the sand, when price closes above this, this tells me something. This is like an if-then statement in programming. It's like, okay, if this has happened, da-da-da-da-da, then when price closes above this point, then we have something for sure. Okay, now this is going to happen on your big time frames as well as your small time frames too, so it's regardless, but it always happens. New low or new high, and then the first red candle in this case that retests that low, and then I'm looking for that close right above that point. All right, now this puts in line this price action to the upside. All right, now where do you put your stops and targets and all that kind of good stuff? Well, that's a really good question here. So let's go ahead and do that. All right, so for this case, my entry would be right after this green bar closes. All right, now this signal also allows you to wait for the entry as well. So the signal will fire off as soon as that red candle closes right there. So you had 1 bar of prep time for you to measure out risk reward, all that kind of good stuff before you get into the trade. Now, personally speaking, I would put my stop just below this area right here. Okay, so and that's just below where these 2 other wicks are. I wouldn't put it all the way down there just because I think it's a little too much risk for this particular setup. But I like where all that consolidation is, and I put it right underneath the consolidation in between the lowest point and when that first red bar plotted. Okay, so that's where I like to put my stop, and for me, I like to shoot for a 1-to-1 ratio out of this. So pretty much exactly how we have it here. You get your 1-to-1 ratio here pretty in good order without too much trouble, just another couple candles later, and you get that T1, and now you're sitting ready for your second target. Okay, and your second target, again, obviously you'd be that would be your entry for your second target. And on my second target, I like to shoot for roughly right around a 5-to-1 ratio, or where supply and demand are going to be kicking into this particular setup. Okay, so that's personally what I like to do whenever we see 5-to-1 here. Let's see if we can't do that a little bit better. So we'll try to manage this on up here just a little bit higher. All right, so there's your 5-to-1 ratio roughly. Okay, so if you're getting long, that's how high I would want it to go. All right, for a secondary target, and that way your money management works out. I'm not going to get into money management at all, but just trust me on it for right now. Okay, so that's kind of how that setup would go on. Let's go ahead and look at some of these other markets here. Going to show you the same pattern working out on a stock market. Okay. This is for more of a swing trade type of position. Okay, so we have a new low down here, and I just happen to be monitoring this one. That's why I know about it. So we have the new low down here, and then we have the first red bar that retests this low. Okay. Price closes above it on this green bar right there, right? So where's your risk, where's your reward, all that kind of good stuff. Let's measure this out one more time. Okay, so let's say that we're entering right over here. We need to put our stop right down there to where all the consolidation point is, just to the left. Okay, so our reward needs to be roughly 1-to-1 from that point on. So you see my risk to reward ratio plotting out here in TradingView as such. Okay, so trying to get that close to 1-to-1, but anyway, somewhere like that. So we got in the 1-to-1 here just a couple days ago, and now it's moving on. Now, in this particular case, I think that this thing can move up close to a 10-to-1 reward for the secondary target. So we're going to stretch this one all the way up there to 10-to-1. Okay, like it can really go. If we look in the past a little bit, you'll see why I say that. Look at where all that consolidation, you see all those candles overlapping one another over there? So that's where I'm looking at. Okay, I'm thinking price is going to go all the way back up there. Okay, so that's kind of how that whole thing works out here. Let me take a drink real quick. Okay, so that's the basic idea of this setup, and this setup is called the price action failure. Now, looking at it bar by bar, this may throw some people off, and I realize that. Okay, so if bar by bar reading, just out of curiosity, how many people here are comfortable with bar by bar reading? Or maybe a better question is, how many people does bar by bar reading scare the living daylights out of? You're like, oh my, he's got a blank chart on there. It's a little intimidating. You're fine with it. Hey, that's great. That's absolutely awesome. So anyway, I think it's another way to look at it, just because I've had a few different students come and learn this type of deal. And if you want the system that automatically identifies these things and texts you and alerts you and all that kind of stuff, we have that available on the website too. But I think this is really, really cool as well. Basically, I call it the W and the M pattern when we look at price with just a line diagram. Maybe a line diagram or a line on close is more your feel here. Okay, so we can put this together as basically on the bottom, it's going to form a little W. Or if you're familiar with reading price action, then it is actually a higher low. So it could be a W pattern, you know what a W looks like. All right, or it could be a slightly higher low here. Okay, that's really what we're looking for in this pattern overall. Now, when do you use this? Where do you use it? All that good stuff. Well, I recommend using it with basic concepts of supply and demand. I unfortunately just do not have enough time with you guys today to get into everything that I want to cover with you guys. We're just going to be talking about price action. We're going to leave supply and demand and overall market structure out of the equation for right now. But this would be the pattern, kind of like what we see down here. Same type of setup with the blue line, except we're looking for this W pattern. And on the opposite side, we'd be looking for basically an M type of pattern, or a lower high type of deal. Okay, so we kind of have it right there. Let's put on the little spotlight tool here. So we kind of have it going on right there. You can see a new high. Something else to also note on this, you need to have it to where price is making an overall new high or a new low, okay? And we have a couple different ways of saying, hey, this is a new high or new low. Basically, you want to push your, well, I guess that gets a little complicated without me completely diving into it, and we have some other patterns that I want to share with you guys too. Okay, so this is the W and the M pattern, and these are more reversal type patterns. Okay, the next thing that I'm going to show you here is what I call a continuation pattern. Okay, we're going to go back to the candles for this one because I think this is super duper cool as well, and hopefully this will make sense. And I'm just going to find it here for you guys real quick. We see price moving down very, very rapidly with this red bar on this particular market. And lo and behold, you see this little red bar in there. And let's zoom in just a little bit more. Let's see if we can do that here. Okay, you see this little red bar inside of that big red bar coming down there? Okay, so that starts kind of the pattern in a way. But before that pattern actually can start, before that inside red bar really means anything, I need to see two previous red bars, okay? So this is a continuation pattern that I have noticed over the years that has yet to really fail. We're not going to get into all the complicated things about it, but I just think it's really, really interesting, and hopefully you guys will find it really, really interesting too. Okay, so this little red inside candle, what that represents, an inside candle to me represents consolidation. Remember how we're talking about the two major phases of the market, consolidation and expansion. So that represents consolidation, and once you've identified consolidation, for me, that's really, really exciting, because when I see the price getting all tight and consolidated, I know that there's going to be an expansion piece out of there. So whenever I see consolidation, I'm like, woohoo, now's the time to be getting on board, okay? Because it's going to release all of its built up kinetic energy, and it's going to expand really quickly, and that's what I'm hoping for, okay? So you see that nice little inside bar, and as soon as that bar plots, basically what we're looking at doing is we're going to be looking at taking this as more of a breakout trade out of this low right here. Okay. Now, if you see this inside candle happen, or if this is a green candle here, this also works too. Okay. Basically, the pattern is as such. Actually, let me, okay, so the pattern is as such. So we're coming down here, get the inside candle, and now we're waiting for this low to break here. So this is the alert candle, and we're waiting for this high to remain. Actually, we're waiting for 2 candles ago. We're waiting for price to stay below this point, all right, or equal to this point. And we would be entering as soon as price started to make the new low. Now, this is a continuation type of model. So again, as far as our risk to reward goes, let's go to the downside on this one. hopefully all of you that are into futures and Forex already know about longs and shorts. If you don't, we have a intro class, that price action school class can tell you about going short in the marketplace. So as soon as price goes below this low point, that would be my entry area. And I'm looking, again, for a 1-to-1 ratio in between the highest point of when this inside candle was plotted and when the outside candle was there. All right, so again, I'm just looking for that quick little 1-to-1. Pardon me, I need another drink here. Okay, and looking for that 1-to-1, and then again, I'll be looking for like a 5-to-1 type of ratio for my next target. Okay, so that would be T1, and then lo and behold, look at where price came back to retest. So let's say that you got short off of this breakout type of trade, or off this continuation trade. Look at where price comes back to, like to the tick, all right? And for a lot of traders, like if you get that T1, you know, always expect for your entry price to be retested once, okay? After it gets retested once, then I would say move down your stop and protect yourself. But until that happens, don't really bother, because this retest happens too much. It knocks out the soft hands, we'll just say, or the fidgety hands. You know who I'm talking about. Oh wait, there's a whole lot of fingers pointing back at me. So yes, I've been there, done that. Don't let this knock you out, and then you can stay in with the trend for the long term. Okay, so just be aware of this. I'm going to show you guys another quick example of what this thing looks like, just because I don't know that that was exactly clear enough. Okay, so here's another quick example of the same pattern happening but to the upside. And again, this is a continuation, like a trend continuation type of deal. It's also really nice when price breaks a high, as it does this pattern. So in this case, it breaks a previous high right over here. Okay, and we have two green candles, one right after another. Then we have this small red candle right here. All right, and then we have this green candle. Okay, so this small red candle is our key candle in all of this. Okay, this is where you identify that consolidation, and as soon as you identify the consolidation, personally speaking, that's like that's just awesome right there. You know, I love consolidated candles because usually what happens next is expansion, and that's where you make all your money, is on the expansion moves. Okay, so that little candle right there needs to stay above the low of these two candles. Okay, so it's kind of a 3-candle formation in some way. However, this could be variable. Like after we identify this, the price might not close above this point for 10 bars, maybe 20 bars. Okay, but this is what put it into play. All right, so 2 green candles, red candle, and then we're looking to see when price closes above this red candle here, and again, this would be more of the continuation to the upside. So whatever the highest point is in between when this red bar closes and plots, and whatever the highest point that is there before that, that's where you want to put your entry point. Now in this case, the red bar is the highest point. Okay, so again, for our entry, I would be pretty much just looking at using just this candle as my potential entry point. Okay, so again, measuring at your 1-to-1, look for your 5-to-1, and there's T1 and T2, and away we go. And again, this is more of a continuation type of trade. Look for this setup to be breaking a previous high or a previous low pivot, and you should be on your way. Now, these are the 3 major signals, or actually it's 4 major price setups that I wanted to go through today. I realized that I went through them pretty fast, so if you guys have questions, please feel free to ask. We really want to make sure this is a good training experience for everybody involved. And again, this is the first time that I've shared these setups with anybody, so I'm hoping that this makes sense. But these are some of my favorite setups that I like to use, and why they work the way that they do. I could probably lecture a really long time about it, but I don't want to bore anybody, okay? Because when you understand how consolidation and expansion work, now maybe price didn't get out there and maybe it didn't go as far as we wanted it to go to the upside, but if you can at least get off your 1-to-1 ratio, and without getting into too much money management stuff, if you can get off that 1-to-1, mentally you will feel really, really good, like you've done your job, okay? On this market, I've been watching this market for a while, and you guys can see this thing launch to the upside, and again, this was one of those that actually we had a new low point down here. It gave us the PAF, and it completed out in off of the daily bars here just a couple days ago, so I just thought I would share that with you, okay? Let's go look at the Euro USD. I just want to share with you guys some of the trades that I've been taking based upon this information and knowledge, how this stuff all works out. Now, if you guys have been following Appazones on YouTube, we've been looking at this thing being an uptrend for quite a while. The neural network that I programmed out actually started reading this as an uptrend right here, okay? And basically what the neural network is, if you guys aren't familiar with neural networks, just out of curiosity, how many people here are familiar with a neural network? You guys know what that is? Okay. So in the most simplistic way of defining a neural network is it is a system that learns over time and that actually changes and adapts to new circumstances as price moves along. Okay, so this is what a neural network looks like, just so you guys know. Basically, it has a whole bunch of parameters that it's monitoring, okay, kind of like all your senses in your body. Okay, you have taste, sight, all those kinds of things, and then it goes to your brain, and only when your brain says, "Oh man, there's the smell of smoke," does this hidden layer actually say, "Hey, you need to be aware of your smell sense." Okay, so this is like basically in my neural network, I have 15 different price action criteria, just kind of like what we're talking about here today. Actually, the price action failure, that is one of the criteria for the neural network, okay? And it comes into the processing layer, or the 5 judges, okay? And on my software, if you use the neural network software, it actually displays to you what the 5 judges are telling you. And then the bottom line is, hey, the trend is XYZ, okay? So if we come over here and we put the Elite software on here, this is the Appa Elite software, we apply it to the chart, you'll see that when it's all said and done over here, let me turn off the zones for a second, okay? You'll see that what the 5 judges say. It's also the tick size, just in case you're trading on Forex versus stocks and futures. You always need to know what your tick size is really worth. And then the trend is, bottom line is, what is the trend doing? What is the trend telling us? Okay, so the trend is up, okay, and it's trending, all right? So that's deciphered from all of this stuff. Now, to me, you may not gather that the trend is up from this picture. You know, it's just, you may or may not, depending upon your skill level and how long you've actually been watching charts, okay? But when we know what to expect as far as the trend is concerned, then we use the ideas and concepts of supply and demand to gather that, okay, and to complement that into a nice trend follow approach. If I know that the trend is up, I should be seeing supply levels break more easily than demand levels and things of that nature. So that's what all this software does, and it can give us indications of when all these factors have come to play, and it's really, really sweet. So that's just a real quick little example of what the neural network does and how we can use these setups in correlation with the neural network. Now, I think it's really, really important that you know what in the world is going on. When we look at software and hardware and technology, it's really great that it can speed up so much of our lives and make our lives so much easier. And in the trading world, I've been doing this for a long time now, and it's so nice to have automated alerts to where I can get a text on my phone and gives me probably 15 to 20 minutes to put in my orders, and then it either gets executed or it doesn't, you know, and I can calculate all my risk reward and stuff, and I'm not rushed. Super duper awesome. But I think it's important that every single person that uses software as tools to realize that it is a tool. You know, it's not the end-all be-all, and we need to approach it as, hey, you need to know what the tool is doing. So in case something unexpected happens, you either know how to fix it or you know what it's doing and what it's doing right or wrong. You know, so I guess my thing is not to have blind faith in anything. You know? So that's kind of what we're looking at here with a lot of the APAZone systems and in the education. I don't want to just give you really cool tools that help you out. They are really cool tools. They're very advanced. But I want to help you understand why the market does what it does. You know, when should we be looking at these levels? You know, should you really even be considering this zone right now that we're in from $8 up to $9.90? What should you be doing there, or should you be doing anything? You know, so all of that stuff is important. And with the APAZone system, what we do is we're actually teaching you how the software works so that the software can be your crutch for as long as you need it, but then when you don't need it anymore, you can go out to these blank charts and say, oh, well, I understand where this market's going because of X, Y, Z. You can jump into a room full of traders off of a chart that you've never seen, give yourself about 30 minutes to a minute to analyze the market, and you should be able to trade that market, okay? So that's really what we're looking at here with the APAZones. And the first part of APAZones, and this is really, really cool, we put together this price action school class. It's a 4-week class, basically 1 video per day, and it has homework that you turn into one of our mentorship coaches. And as you're working your way through the mentorship class, you're doing the homework and you're getting an understanding of why are the bars doing this? How do the bars relate to one another? How do the bars relate to the market structure overall? Is this likely to be a reversal point? Is this likely to be a continuation point? When do I say that this is going to be a continuation area? When do I say that this is going to be a confirmed reversal? Kind of like with the price action failure. That is a reversal type of pattern. Okay, so all of those things are in the price action school, and you work your way through the videos, and it's just really, really great. We've seen a lot of good success come through the price action school, and it is the first part of our mentorship course, which I tend to think of trading maybe a little bit different than most. My idea in this is to duplicate myself. So while I do some training, I want the community that has been built up here in the Appazones community to do a lot of the teaching. Okay, so there's coaches that will answer and do your homework with you as you go through the price action school. There's another student, a previous student, that has proven their success that will teach you in the mentorship program. So we want to do things a little bit different. And after you become a successful trader, guess what? We pay you to train somebody else. So I think it's a different model than a lot of people. We want you to pass it forward in life, just like in everything else. So if you really want to know that you know something, teach somebody else it, and then you can really say that you know it. You have to pardon me here, I need another drink. So all of our students are really required to be a teacher to some degree, whether it's just sharing their trades in the training room or whatever have you. Okay, in the Skype room, doing stuff with other traders. We encourage every single person to get involved. Okay, so this is a little bit of what the price action school looks like. And now the price action school's normal price is $149, but actually for today, if you come over here to this promo, this is the website address right here. We are doing it for, if you click add to carts, I've made it so that it's only $97, okay? So that promo is going to go on for the rest of the weekend, and then it's going to go back up to its normal price. But that's what we're looking at here, and that's the URL for getting involved in the price action school. And a lot of these patterns, well, I shouldn't say a lot, but like the price action failure pattern is included. If you guys have questions about that, that's included in the price action school, and a whole bunch of bar by bar reading. Okay, I believe bar by bar reading is the first step. I think volume's really great, and patterns and things of this nature are really awesome too. But I think that knowing what each bar means first and foremost, and then when you put supply and demand and mix it with the price action and the volume, you can really get to understand why the market has done what it has done. You know, what does this pattern mean down here in context of everything else? You know, how do you step on board? Pushing out some videos here. Every Thursday we actually do videos and post them on our YouTube channel. Okay, so if you're not familiar with our YouTube channel, come check us out. We do weekly forecasts on all kinds of different markets, so you can see what it looks like over time. You know, we really have nothing to hide here. We'll say, hey, based upon what price action is doing, all of this stuff should play out. And then what's really, really interesting is a lot of times some major news event will come out, and then like it accelerates the move from demand up to supply, and you're just like, huh, wonder why that happened. Oh wait, I know why it happened. So it's amazing to see how news events actually a lot of times just accelerate the move for us. So I think that's really, really cool. And you can see that we have several months of videos here on our YouTube channel. So recommend you come check out our website and the YouTube channel and get involved, you know. And for only $100, I mean, if you're futures trading, $100 isn't hardly even, it's less than a trade as far as your risk goes, you know, so it's really peanuts when you think about it. So you guys can get involved, and you can see our live events. We do a live market analysis room a few days a week. You guys can join us for those market analysis rooms. I'm also going to be starting the UCLA class, so if you guys want to jump into the UCLA class, we open it up to our other Appazones members as well, as we're teaching remotely at UCLA. So it's a really cool relationship that I've built with UCLA over the past few years as I've been teaching over there. So very, very cool stuff. I hope to see you guys involved. We have a whole bunch of resources on the website, video libraries, training, all kinds of things. Here's our weekly schedule of different things that we're doing. If you guys have any questions, please feel free to ask them in the questions box, and I'll get to those things here. Okay. Let's see. What time frames is this system for? Well, first off, the markets are fractal. Okay. So as far as what time frames does this work for, it doesn't really matter, because I'm playing mathematical type of equations and the math and fractal type of math. So that's really what the system is based off of. So it works regardless of time frame. Okay, like for the price action failure and the continuation stuff that we were talking about earlier. So it really doesn't matter. I'm using free stock charts right now here at tradingview.com, just because I think it's a good place to get your feet wet. And when this stuff makes sense to you, when the line on close makes sense to you, and you can trade that well, then there's really nothing holding you back in your trading journey. So so that's kind of what we're looking at here. But trading is a game and is a business of probabilities. Okay, so I'm not going to get into too much of that right now, just because that's a whole nother topic. But trading really is about probabilities and stacking the odds in your favor, and it's really cool how that all works. Okay, so how short of a time frame could you use this on? Well, you can use it on the daily time frame, or you could actually use it on like minute bars or tick bars or range bars. I've used it on all the above. All right. For instance, let me bring up another chart here. Here is the price action failure, and actually the price action failure is also an indicator that we have on the website. Oh, I told you the pattern, but we've actually put the pattern into practice. Okay, and so we can apply it to our charts, and it will load up. And we also have it here for, let me bring it over to stock charts too. Let me see if I can grab it here real quick for us. I also have it as a indicator here. So it's it's part of my scripts that I've programmed out as well. So go ahead and apply that on here. So that way we can see when the price action failure lines would actually naturally happen. Okay, so that's what the price action failure is. It's available for a whole bunch of different platforms. And again, we're waiting for price to close above this little green line that just gets plotted right here. Okay, so 1, 2, 3 bars later, price closes above that point here on the Euro USD right now, you know, and we're starting to soar to the upside in real time. You can see this. So that's what we're looking at here, guys. That's what we're doing. So what is UCLA? UCLA is a big university here in the United States. New Zealand dollar. Yeah, we can go ahead and look at the New Zealand dollar. Hey, this is actually a great market to be looking at. Now, I'm gonna take this one and I'm gonna look at the price action failures here on the line chart. Okay, so this thing got really flatlined up here, right? Like that was just moving sideways. You can see this line is plotted on close of the candle, so you can see where all these closes just happen right at the same point. All right, so technically speaking, because all those closes are happening at the same point, the first higher low that I see is right there. As soon as that one forms right there, you'd be getting on board somewhere down in this range, and your stop would be up here, okay, because you don't have a whole lot of risk, and you'd be going to the downside on this thing, okay. So that could be a good possibility, and that would be roughly your 1-to-1 ratio right there too, okay. So that's what I would be looking for and kind of how this all works. Price action failure on TradeStation. Yes, yes it is. We have it on a whole bunch of different platforms here. Let's come over here real quick. Here's the price action school. Actually, let's come over here. Under software, it's called PAF, okay? Price action failure. So you can click on that. It's a standalone product. I really, really like it a lot. I probably take 90% of my entries off of here. And again, it goes through the whole setup and what it's doing, just like what I've tried to explain to you guys today, how it works. So again, you'll get a written idea of how this all works, all right? So that's a little bit of the price action failure, and it's available for 4 or 5 different platforms. I'm also going to be making it available for text alerts so that it can just text your phone whenever this happens on a market that you want to watch it on. So if you guys want to watch stock markets, then we can make a little text alert that happens whenever it happens on a stock market that you guys want to be watching, okay? And that way we can build it into a nice little scanner for you and get it on going on there. So if that interests you, getting the text alerts of when the stuff is happening, send me an email. It's not officially launched yet, but I'm going to be cranking that out here in the next few weeks with a full cell phone type of trading setup deal. So just because that's really where I'm at right now, so I'm making all that stuff available to everybody else. MT4, yes, we do support MT4, NinjaTrader, TradeStation, MT4, and CR charts, and also phones. So, and some stuff is on TradingView, some stuff is not. TradingView is a great little free software or free platform that you can use. I do recommend subscribing to it just because you get a lot more features, and it's just really, really handy if you are mobile trading. So it's good stuff. What is the cost of the software? Okay, so let me come over here. The price action failure software is, if you scroll all the way down here, and let me put this link in the chat box for everybody. This is a link, the PAF software, and you can actually set it up so that it texts you if you buy the software on one of the supported platforms. But the PAF software is $2.99. Okay. If you guys want to join me a little later on here, we're also doing another training session. So I'm also going to give you guys out the link to that as well. That starts here in roughly 15 minutes. So I'm trying to get all this stuff working so that I can go right into the training session from here. So if you guys want to join me for the training session, I will be sending the link out here momentarily. And again, guys, don't forget about the special promo that we're having for the rest of the weekend. It's our 4th of July special, if you will. And here is the link for the training session that's coming up here in just a few minutes. is the other packages of software that we have. Recommend you check out the website to learn more on those. And again, you guys can get started on the price action school for only $97 today, so I think that's just absolutely awesome. And you guys will get to encounter one of our coaches, so that's pretty cool. Hopefully everybody can see the link for the training webinar that's coming up here in just a few minutes. But just want to say thank you for everybody coming out and joining me here today. If you guys have any more questions, feel free to jump into the other webinar room that we're going to have going on, and we can dive into the nitty-gritty. Okay, so with that being said, I'm just going to pass everything back to Rory, and thank everybody for spending some time with me today. There shouldn't be any password on that room. You're looking for the full price. You're looking at the methods. Is the only package that we do now. The Elite software, which is a neural network that is only available in the mentorship. So you're looking at $159. All right, well, thanks everybody for joining us here today. Really appreciate your time, and we will see you in the markets.
Thank you very much, Gabriel. Excellent, excellent presentation. And I want to thank everybody, all of our presenters today, for the incredible wealth of information and knowledge. Neural nets, Gabriel, Brent, Apazones. Very impressive software. Only $99 to get started. Excellent. I want to thank all of our registrants, all of our attendees, all of our presenters. It's been a pleasure. I want to wish everybody a very happy 4th of July. Love this country. Celebrate every year with a barbecue. And I suggest you do the same. It's going to take a few days to digest that barbecue and all of this wealth of knowledge that these great gentlemen, ladies and gentlemen, have given us today. So I'm going to go ahead and sign off. Gabriel put his link in the room. He's going to have another training session. If you look in the chat box, you'll be able to join him there. So from Right Line Trading, we want to wish everybody a happy holiday, 4th of July. Thank you very much. We appreciate you attending. Have a great, great evening. So long.